So, good evening to all the physical participants and as well as online participants. While more would be joining, I think there is an echo. Yeah. So I think more would be joining as we go along. But since we have a long day today, around 3.5 hours already are slated today, so we'll start on time so that we can also wind up on time. So we'll start with our first speaker, Shri Saurav Gupta, uh, who is a chartered accountant and who is regularly practicing in income tax, is an expert in income tax, handles various cases including search, seizures, and represents before the income tax tribunal and other forums also. So Saurav will deliberate today on a host of topics. He will be speaking on income from of other persons included in total income of the SSE, aggregation of income, set off carry forward and set off of losses, deductions to be made in computing total income. From A to E, also we have given him the miscellaneous sections, miscellaneous provisions, section 499 to 535, but excluding 536, which is the transitional provisions, which we have already covered in the first class. So we have also requested Saurav to, while to go through all the sections like in the past with all our speakers, but mainly to elaborate and discuss the changes and the impact of those changes of 25 vis-a-vis 1961 Act. So over to you, Saurav.
Good afternoon, sir. Thank you so much, Vivek, sir. Good afternoon to everyone present here, all the distinguished dignitaries and everyone joining us from the online portal. At the outset, I would express my heartfelt gratitude to the Bengal Chambers of Commerce and Industry for giving me this opportunity to address all the distinguished dignitaries. First of all, it is very important to say that I would like to personally thank Vivek sir for this opportunity, because I was very reluctant to take up this deliberation. He is the one who encouraged me to do the same. So thank you, Vivek sir. And special appreciation to everybody coming here on a Saturday and the onset of the holiday season. So friends, the Income Tax Act 1961 has served us and governed us for more than 6 decades. Many of us have grown professionally, practiced it, litigated it, and we have relied upon various judicial interpretations of the outgoing act. However, there is a shift in the 2025 Act, which is more than the legislative replacement. It is a shift in the approach of the department, wherein they have tried to simplify the language and the drafting philosophy so that the litigation reduces. But let's see how much the litigation is reduced because of the new act. What we have to do is, we have to first have the mindset of unlearning the 1961 Act and then relearning the new architecture which the statute has given us. However, the provisions remain the same. There is not much change in the mechanism. More or less, they have simplified the language of the act. So let us go through the provisions of the chapters that have been given to me. Our old act was presented by Morarji Desai in 1961, and now the new act has been acted by Nirmala Sitharamanji. So then we start proceeding with the income of other persons, including the total income of the SSE, section 96 to 101. There is not much substantial change in section 60, which is the new, which is section 96 of the new act. For your convenience, what I have done is, in the slide you will see the old act, the words which are not there in the new act have been striked off, and what the wordings of the new act have been enacted. So there is not much substantial change in this section. Section 61, revocable transfer of assets. There is no much substantial change in the provisions of the act. The core principle remains unchanged, wherein the income arising from revocable transfer of assets continues to be taxable in the hands of the transferor. There is just a minor language change wherein they have simplified the language for better enablement. Similarly, transfer of irrevocable transfer for a specified period. Similarly, the name of heading of the chapter has just changed, chargeability of income in transfer of assets. Otherwise, everything remains the same. Here we can see some of the words have been striked out and the language has been made simpler. There were the provisions were of subsection 1, clause 1, clause 2. It has been more simplified as the provisions of subsection shall not apply where a transfer is by way of a trust which is not revocable during the lifetime of the beneficiary, and in case of any other transfer is not revocable during the lifetime of the transferee. The transferor does not derive any direct or indirect benefit from such income in cases referred to in clause A. So you can see there is not much difference. Only the language has been made simpler and more inclusive. We go to section 63, transfer and irrevocable transfer defined. Similarly, the definition remains the same, only there is a reshufflement of words wherein the language is made more simpler. In the sections given to me, you will see major differences are in respect of the language. There is no much substantial change in law. So therefore, I will be quickly going through this presentation. Wherever there are major changes, we will discuss it accordingly. Section 64, this is one section, clubbing section, wherein most of us have been using it in regularly, like income of spouse, income of minor child. This is one section of clubbing which is used regularly. The major change is that there was two provisions, section 64(1) and 64(1)(a), wherein there were two different interpretations. In section 64(1), the language started in computing the total income of any individual. There shall be included all such income as arises directly or indirectly. Whereas 64(1)(a) said arises or accrues. So there was a minor interpretational difference between section 64(1) and 64(1)(a). This has been done away in section 2025 Act. They have included both the provisions of 64(1) and 64(1)(a), wherein the section combines both and says the total income of any individual for a tax year shall include the income arising directly or indirectly. Therefore, the ambiguity that was given in section 64(1) and 1)(a) has been done away and has been included in the new section, that is 99(1). However, there is not much significant impact. Here I would like to say, I don't exactly remember the name of the case law. There was an interesting case law wherein there was a case of a minor. I guess it was a Bombay High Court case. I don't exactly remember the name of the case. What had happened is the assessee was a minor and he was an orphan. So he argued that I would not be falling under the definition of person since I am a minor and I am not a legal heir to anybody because both my parents are no more. High Court said no. Even if you are a minor and you can be held liable for the liability of the parent, since you would come under the purview of section 64. So that act still is there. I don't remember. I would share the case law soon. For section 65, liability of a person in respect of income included in the income of another person. There is no substantial change. The changes are already highlighted in the. Yes, sir.
Yeah, one point over here,
Yes, sir.
we were discussing income from house property
Yes,
the
sir.
other day.
Mhm.
There, under section 25, which is the which is corresponding to section 27. Section 27 earlier of income from house property, that says very specifically where income from house property is deemed to be transferred, right? Now they have worded it, they have removed house, they have said only property. So do you think that that change, any property which is transferred, that will have impact over here
Yes,
also,
sir.
section
Yes,
99?
it will, sir, because here they have made it explicitly that whether directly or indirectly. So therefore, if the property is transferred to the minor, any income deriving it would be taxable in the hands of the person against whom the income of the minor is taxed. So there would be a direct relation to that.
Okay, so now any property over there also, including not only house property but furniture,
Yes.
etc., that can be taxed over
Because
here and clubbed.
they have done away with the word house there. So
Thank you, sir.
now coming to section 65, they have just simplified the language. In principle, the law remains the same. The provisions have not been changed because these sections are very much assessee friendly, or we may say there were no recommendations from the select committee also on these changes, because they were just what to say language changes where they tried to make the language simpler. We will see, since much water has flown under the old act, now how the law will enact the new law, how the courts will interpret the new law, it is to be seen. So as of now, there are not much changes in the new act in comparison to the old act. Now, since we have completed the income of other person included in this, so before coming to the next part of my presentation, is there any query or any questions in respect of the earlier part, so that we can proceed, because this is an important part, and these sections are more or less governing the litigation scope of Calcutta presently. Aggregation of income, where section 68, 69, 69B comes into picture. So before going to that, are there any questions, whether online or people present here, so that we can proceed to the next part of our presentation?
Anybody online, any questions till now in clubbing provisions? No, we can continue.
Okay. So we continue to the next part. This is a very important aspect. Before starting my presentation, the section wise, I would say in the earlier deliberation, we might have seen there a difference, a paradigm shift to the assessment year, financial year with the tax year. Similarly, in section 68, 69, the word may has been changed with shall. This is a very big change. How we would say? So let us first go to, we are coming to section 66, is not of much difference. There is no change at all. So we directly come to section 68. Section 68, earlier section 68 said, where any sum is found credited in the books of an assessee maintained for any previous year. Here the previous year has been gone away with, since tax year concept has been introduced in 2025, and the assessee offers no explanation about the nature and source thereof, or the explanation offered by him is not, in the opinion of the assessing officer, satisfactory. The sum so credited may be, the important term to note here is may be charged to income tax as the income of the assessee for that of that previous year, provided where the sum so credited consists of loan or borrowing or any such amount by whatever name called, any explanation offered by such assessee shall be deemed to be not satisfactory unless the person whose name such credit is recorded in the books of such assessee also offers an explanation about the nature and source of such sum so credited, and such explanation in the opinion of the assessing officer aforesaid has been found to be satisfactory. Another proviso was added further, provided further that where the assessee is a company, not being a company in which the public are substantially interested, and the sum so credited consists of share application money, share capital, share premium or any such amount by whatever name called. Any explanation offered by such assessee company shall be deemed to be not satisfactory unless the person being a resident in whose name such credit is recorded in the books of such company also offers an explanation about the nature and source of such sum so credited, and such explanation in the opinion of the assessing officer aforesaid has been found to be satisfactory. Provided also that nothing contained in the first proviso or second proviso shall apply if the person in whose name the sum referred to therein is recorded is a venture capital fund or a venture capital company as referred to in clause 23 FB of section 10. So, in the old section, I would say old section because this section still continues till March 26. This provisions was relating to cash credits, wherein if any sum was credited in the assessee's books and the assessee did not offer any explanation regarding the same, the assessing officer had the power to add that as a cash credit under section 68. Now, the changes what have been done in the new act, where any sum is found credited in the books of the assessee maintained for any tax year and the assessee offers no explanation about the nature and source of such credit, or the explanation offered about the nature and source of such credit by assessee is not satisfactory in the opinion of the assessing officer, then the sum so credited shall be, the word shall be is very important here because that is the major change that has been made, charged to income tax as income of the assessee of that tax year for the purpose of this subsection 1, where the sum so credited consists of loan or borrowing or any such amount by whatever name called. The explanation offered by such assessee shall be deemed to be not satisfactory unless the person in whose name such credit is recorded, the books of such assessee, everything remains the same. Similarly, the second proviso is converted into subsection 1 and for it remains the same for venture capitalist. What is the distinct departure from the old section is that the word may has been substituted with shall. The word may conferred discretion on the assessing officer to decide based on facts and circumstances whether that credit in the books of the assessee was to be treated as income. There are cases where the assessee was able to justify that those credits were actually genuine, those were not added. But now suppose in a case where in 2021 the word may has been replaced with shall, what has happened there, the provision now has been made mandatory. We can say that in case suppose the assessee does not make any explanation or explanation is found unsatisfactory, the assessing officer at his discretion could have treated as an unexplained credit or could have given relief to the assessee. But in case here, if the explanation is not found to be satisfactory, the assessee has no option but to make an addition because the word shall has been introduced. In this case, the similar word may has been changed in section 69, 69B, which is the new section is 103, 69A, 69B 104, 69C which is 105. The select committee, from the stakeholders, the select committee had received recommendation saying that the word shall still be replaced by may and there should not be any changes. However, the ministry said that this amendment is necessary so that we can rationalize the provision by removing the discretion on the assessing officer, because this is the most litigated section especially in Calcutta. So, the select committee did not accept the feedback of the experts and the stakeholders and they did not make any changes to the recommendations. I would say word shall was also there. My seniors in the profession would know, Vivek sir would be knowing better. There was a section 104A wherein penalty was levied for non-payment of self-assessment tax. Now that section has been repealed. That section also had the similar wording of shall. There was a case before the Madras High Court in the case of CIT versus Mysore State Fertilizer, wherein the AO had levied penalty on the assessee saying that the self-assessment tax was not paid within the designated time and therefore penalty was to be levied automatically. The matter went up to Madras High Court. The High Court said, the High Court meticulously analyzed the section, provisions of the section and the word shall. The department contended that the word shall implies that the penalty is automatic in nature because the assessee has not made the payment of self-assessment tax within due date and within due time, and therefore the penalty has to be levied. The High Court said no. The assessing officer has to accept and see whether the explanations offered by the assessee are correct and to his satisfaction, and that the penalty is not to be levied automatically. Similarly, the ratio still applies here because word shall does not give a power to the assessing officer to blanketly make additions under section 68. There were FAQs also in respect of this amendment, wherein it said, please highlight any major changes made through income tax bill in deeming provisions. The CBDT has given the answer. The provisions have been simplified. Section 69B has been split and merged with section 69 and 69A in order to reduce disputes on rate of taxation and to provide certainty. The reference of the section specifying the rates of taxation has been provided in this chapter. Towards reducing ambiguity, certainty has been provided so far as possible, and rate of taxations have been specified in the chapter itself. There was another question, why has the name of section 68 cash credits in the existing income tax been changed to unexplained credits in the bill? The department said section 68 of the income tax is concerned with taxing the unexplained credits rather than the credits on account of cash found in the books of accounts. In the corresponding section 102 of the new bill, the provisions of the section remain the same and there is only change in nomenclature. The unexplained credits will continue to be taxed under this section. So, the major key impact here is, see, the litigation scope of 68 still remains the same. There would be litigation because of the phrasing of the section. Now, if any credit is there in the books of the assessee has to offer an explanation. Here, automatically, if the assessee does not give an explanation, in the old section also there was addition, and the new section there would be additions. Similarly, there was a judgment of P.K. Noorjahan, Supreme Court. While dealing with similar language in section 69, the Supreme Court held that unsatisfactoriness of this explanation did not automatically require the AO to treat the sum as income. This principle will no longer apply under section 102 as the AO will have no choice once the explanation is deemed unsatisfactory. This, I said, this change fundamentally alters the litigation landscape. Now, we have to prove and we have to file with all the documentary evidences which would prove that the credits in our books are genuine, and we have to give proper replies. Same is the case, we have to still provide here, but this now becomes more mandatory for us while advising the clients in respect of any such credits to be more careful while taking such credits or taking such loans, if I may say. Sir, if you have any question.
Yeah, now two questions, Abhishek over here, Saurav, sorry, here. One, this, sir, ekটু বাইরে গিয়ে. Now, changing of may to shall, as it is earlier, whatever you give to the AO, on any loan, etc., even when it was confirmed by the other party, you give the bank statements, genuineness, creditworthiness. If genuineness was not questioned, creditworthiness was questioned, and it was confirmed.
Yes.
But in few cases, 1 to 2% cases where it was not confirmed, do you think now the assessing officer will be under mandate to confirm?
Yes, sir. The language of the section says so, but in my opinion, with due respect, if we are able to prove that the documents which we have provided prove the genuinity of the transaction and the creditworthiness of the transactions, the assessing officer still is under the obligation to check those documents and then allow the relief to the assessee. But here, I would say this section empowers the assessing officer to be more towards the revenue rather than the assessee. he may say that I am not satisfied with the document so produced, and therefore I have no option but to make an addition under the new law, because I have to make an addition under the new law.
So, which brings me to the next question, this deletion of 5627B,
Yes, sir.
the angel
Investor,
taxation
yes, sir.
in this budget. Earlier it was for
Yes.
non-resident, it was deleted. Now for resident also in this Finance Act it is deleted. But corresponding provision is there in this section 68, right? For the residents only, which means that wherever a share premium is involved, specifically for the new startups, then there is no escape route out here. Even how will a startup do a valuation? Startup is not a registered startup. I'm not talking about ETIC registered startup, but a normal company who, an entrepreneur who has an idea, who starts a company, and after 1 year he knows that things are good, he gets an investor, and he values his share, 10 rupees share at 100 rupees. So there is no escape route.
There is
it
no
seems.
escape route, sir, but per se, if there is an investor who has a particular business and who values his share and he is able to satisfy that his share commands 100 rupees, then there is a case where he can explain that the person who has invested is a person with means and he is not a person with no means. Here the section 68 was meant for people wherein they were just frequently changing shares, taking shares at a premium, with whether the company giving the shares and the company subscribing the shares had no means. They were just paper companies, so to say. Here, in our case, the person who is subscribing to our shares is person with means, and there would be share valuation certificate which determine those valuations. So, in those cases under the new act, we have a strong case where we can argue that those shares command that much premium. So, we can always argue. So, but sir, that still stays. The litigation stays. The litigation landscape does not end here. There is a very common saying: whenever the income tax tries to simplify the language, the litigation jumps.
Increases, yeah.
So this section still remains the same. It would be the bane of litigation, and major practitioners in Calcutta would still survive on this law for the time being.
No, but we are not talking about those practices in Calcutta.
We are saying just
Genuine taxpayers
yes.
also, this may to shall, I think
it would impact. It would
impact
It would
tremendously, no matter what you show to the AO.
One major thing is here is that in case there is an ex parte assessment, earlier also the assessing officer could have got hold of the credit details from the bank, and then he could make a discretion whether to make an addition or not. But in this case, even if the assessor does not offer any explanation, and if it's an ex parte order, the assessing officer has no option but to make an addition. Even if he makes takes the details from the ROC or stuff like that, if no explanation is offered, then he has to make an addition. So we come to section 69. The wordings are the same, just the change. The section 68 was unexplained credits. Now it comes to unexplained investment. So there is just a change of words, which I have already explained in section 68. 104, 1 and 2 is unexplained asset, whereas erstwhile 69A was unexplained money. Let us go through the definition of asset, because this has increased the width of the section. Let us go through the old section first, wherein any financial year the assessee is found to be the owner of any money, bullion, jewelry or other valuable article, and such money, bullion, jewelry or valuable article is not recorded in the books of account if any maintained by him for any source of income, and the assessee offers no explanation about the nature and source of acquisition of the money, bullion, jewelry or other valuable article, or the explanation offered by him is not, in the opinion of the assessing officer, satisfactory, the money and the value of the bullion, jewelry or other valuable article may be deemed to be the income of the assessee for such financial year. Now the changes in the new section. wherein any tax year, any asset, we have to see there they had defined the word asset. Now they have included asset. The asset has been found to be owned by or belonging to the assessee, which is not recorded in the books of accounts, if any, maintained by such assessee for any source of income, or the assessing officer finds that the amount expended in acquiring such assets exceeds the amount recorded in such books of accounts, and the assessee offers no explanation about the nature and source of acquisition of such asset or such excess amount as the case may be, or the explanation offered about the nature and source of acquisition of such asset by the assessee is not satisfactory in the opinion of the assessing officer, then the value of such asset or such excess amount as the case may be shall be deemed to be the income of the assessee of the tax year in which such asset has been found to be owned by or belonging to the assessee. For the purposes of this section, asset includes money, bullion, jewelry, virtual digital asset or other valuable article. The definition has now included virtual digital asset, which was not the case in the old law. I have already explained may and shall. Under the 1961 Act, where assessee was found to be an owner of an asset and either failed to explain or give unsatisfactory explanation for the nature and source, the value of such asset could be deemed as income of the assessee. Depending on how the asset was reflected in the books, additions were made either under 69A, where the asset was not recorded, 69B, where the asset was recorded at a lower value than the actual amount spent. Both the provisions targeted at unexplained asset. The new act has consolidated those provisions into 104, into a single section, and it has expanded the definition of asset, wherein the term asset is now specifically defined to include virtual digital assets. So the ambiguity has now been removed whether crypto asset and similar digital holdings still fall under the scope of unexplained asset provisions, wherein in the old law since there was no explicit inclusion of virtual digital asset, so there were case laws wherein people were out of this mischief, though, so they have made an inclusive definition of the asset for the purpose of section 69. And one more major change is that earlier the term was owned by. Now they have also included belonging to, which means now the ownership does not depend only if the person is the actual owner. However, in some cases where the actual owner is somebody else and the asset is enjoyed by somebody else, so people could get out of that mischief, but now belonging to has also been included in the definition. Therefore, if that asset belongs to somebody else, but the actual possession is enjoyed by somebody else, still the additions could be made under section 69 or 104 of the new act.
No, but here just possession would the assessing officer will be able to invoke 104 just by possession. He has to prove
Yes.
belongingness.
Yes, he has to prove whether that asset has been enjoyed by somebody else.
Yeah, the enjoyment of the asset
Yes,
is important.
yes.
Maybe for a temporary period it has been kept at a place where a search has happened.
सर इसका एक एग्जांपल है जैसे कि in our household there is a case where people exchange jewelry for the purpose of
Yes.
particular parties. So if in a case there is a search and that jewelry does not belong to that person and that person is just holding for a temporary period, so that we can say that jewelry does not belong to me, that belongs to somebody else. So you cannot make any addition in my case.
Yes.
So there this would come into picture.
So belonging to is much more narrow than
Ownership.
Ownership, yeah. Possession, so
Yes,
to
sir.
say.
Here also there was a recommendation before the select committee. The 2025 Act builds on this jurisprudence by introducing the phrase belonging to, which has a wider and more practical scope. This covers situations where the asset is held in someone else's name, but the assessee effectively controls it, enjoys its benefit, or has funded its acquisition. This change ensures that tax liability cannot be avoided merely by placing assets in the name of a third party while continuing to enjoy or control them, as Vivek sir just said. There was a recommendation before the select committee. However, select committee in its response, the ministry explained that the phrase belonging to was added to prevent tax avoidance in cases where assets are legally held by another person but effectively enjoyed by the assessee. Without this expansion, assessees could escape taxation through name lending or layered ownership structures. The amendment therefore aligns the statute with existing judicial principles and strengthens the law against form over substance arrangements. Now coming to section 69B, there are not much changes here. It has already been incorporated in section 103 and 104. Coming to section 69C, unexplained expenditure. Let us go through it. Where in any financial year an assessee has incurred any expenditure and he offers no explanation about the source of such expenditure or part thereof, or the explanation, if any, offered by him is not in the opinion of the assessing officer satisfactory, the amount covered by such expenditure or part thereof, as the case may be deemed to be the income of the assessee for such financial year. Provided that, notwithstanding anything contained in any other provisions of this Act, such unexplained expenditure which is deemed to be the income of the assessee shall not be allowed as a deduction under any other head of income. The new section, where any expenditure has been incurred by the assessee in any tax year, and assessee offers no explanation about the source of such expenditure or part thereof. The explanation offered about the source of such expenditure by assessee is not satisfactory in the opinion of the assessing officer, then amount covered by such expenditure or part thereof shall be deemed to be the income of the assessee for that tax year. Irrespective of any other provisions of this Act, the amount deemed as income in subsection 1 shall not be allowed as deduction under this Act. The substantive scope of the provisions remains unchanged. If we have to prove that expenditure has been incurred from our own source, if we are unable to prove the source of such expenditure, there would be additions under 105 of the Act.
Here, I am again taking some time.
Yes, sir.
There is one change which I found out in section 105 vis-a-vis 69C. If you can go back to it, the last phase.
Yes, sir.
This proviso, irrespective of any other provision in of this Act, the amount deemed as income under subsection 1 shall not be allowed as a deduction under this Act.
Yes, sir.
Earlier, the proviso, it said it would not be allowed as a deduction under any head of income.
Yes, sir.
So, say I give money to a trust in cash, and during certain investigations, department come to know that, okay, and they add it under the 69C, now 105. So I can still claim if the trust gives me 80G, yes, I can claim, but now I cannot claim that, yes, 80G also.
Yes, this would this has covered even the section 11 deductions which we used to take, or 80G deduction which you take. The new section covers this also. This is a stark departure. Yes, that's with this Vivek sir has rightly pointed out. 69D, there is some change here. What they have done is, first we will go through where any amount is borrowed on a hundi or any amount due thereon is repaid to any person otherwise than by an account payee check drawn on a bank, the amount so borrowed or repaid shall be deemed to be the income of the person borrowing or repaying the amount aforesaid for the previous year in which the amount was borrowed or repaid, as the case may be, provided that if in any case any amount borrowed or hundi has been deemed under the provisions of this section to be income of any person, such person shall not be liable to be assessed again in respect of such amounts under the provisions of this section on repayment of such amount. Explanation: for the purpose of this section, the amount repaid shall include the amount of interest paid on the amount borrowed. The new section, where any amount including interest thereof is borrowed or repaid through a negotiable instrument or on a hundi otherwise than by an account payee check or through a mode as specified by the board in this behalf, the amount so borrowed or repaid including interest paid on borrowing amount shall be deemed to be the income of the person borrowing or repaying, as the case may be, for the tax year in which the amount was borrowed or repaid. Where the amount borrowed under subsection 1 has been deemed to be the income of any person, such person shall not be liable to be assessed again in respect of such amount under that subsection on repayment of such amount, where any amount including interest thereof is borrowed or repaid through negotiable instrument or on a hundi otherwise then and by an account pay check or through a mode as specified by the board in this behalf, the amount so borrowed or repaid shall be deemed to be the income of the person borrowing or repaying as the case may be. The 106 has only widened its scope. Earlier they have also included all negotiable instruments, just like including promissory notes, bills of exchange, bearer or order checks. Earlier these wordings were not there, so they have included all negotiable instruments. The word negotiable instruments have been included in the new section. Otherwise the substantive law remains the same. And section 107 is the charge of tax. Just like the old law, section 68-69 was charged at a higher rate of in 115 BB. Similarly, 107 is the charging section for 102, 103, 104, 105, 106, which is still 60%. So we have completed our aggregation of income. If anybody has any questions regarding that, so that we can move to the next section.
Sir, I have a question regarding that session.
Hello. Yeah. Say for example, I am a sub dealer, right? And I got a laptop as a benefit, and the person has deducted 194 hour. But I haven't booked in my business this because one side it is income, another side it is asset. But I haven't booked. But on a survey or any investigation, if the person finds that, how they will treat this asset?
No, this will be treated as an income in your hand.
Income one side, and the second part.
If you are giving an income, so therefore the corresponding entry would be an asset in your books. So once your income is determined, so there cannot be any other addition. The act is very clear, the section is very clear. Once you have already taxed on the income, there cannot be any other addition.
So that means I have to book that asset on the value of the perquisites.
Yes, definitely yes.
Okay, thank you.
Because that perquisite becomes your income.
Yeah, perquisite become income. On the other side, the asset in which whether it, because I haven't paid anything for that.
So there has to be two entries, no?
Yeah.
So once you book an income, so there has to be a corresponding asset which you will show in your books.
So exactly that amount,
Yes,
benefit amount,
yes.
that I need to show.
Sir, Vivek sir, if you have any other view on this.
Yeah, you are talking about this if the department finds out or suo moto?
Department finds out. See what happens, like because there is confusion on which value we need to book this one. As fair value, whether the income which we have offered, that should be the asset value, or it is because we haven't paid anything, right? So whether it is on a nominal value one, in this confusion we haven't booked anything. And on a survey or anything, department find this, and whether they will treat this as asset, unexplained income or anything.
So I think 28(4), which now becomes 26 what, some clause in 26(2) something. So there you have to offer to tax, in my view, Saurav can clarify further, the non-monetary benefit which you are getting, and that will be offered to tax under 28(4).
Yeah.
Correspondingly, asset you also have to capitalize, or whatever, if you want to charge off subject to the amount.
Yes, yeah,
etc.
capitalize. We want to capitalize.
If you want to capitalize, you have to capitalize at 1 rupee, just for the purpose of tracking, because that amount cannot be capitalized.
No, but we have offered. See, we have offered. Suppose it is for 1 lakh. We have offered 1 lakh rupees tax, 1 lakh rupees income. So correspondingly, we need to make 1 lakh rupees expense or assets. Why 1 rupees?
No, but no expense is already booked.
His question is that if we suppose we get a 194 hour में किसी से मेरे को कुछ भी मिला, I book an income, corresponding मेरे asset कहाँ से create हुआ? So that is what I'm saying. See, if suppose 100 rupees is credited to you, so that 100 rupee becomes your asset also. So
Yeah,
therefore,
that's the question.
in double entry system.
But in my view, maybe here he will have to just book that 30% tax as an expense, and asset value, because he doesn't have that much of funds, no, 100 rupees he doesn't have. This is a non-monetary benefit which he has got. So, I mean,
Because see
possibly
what
it will have
happens,
to be
like,
booked at rupee
I
1.
have offered income on 1 lakh.
Yeah, you have
accordingly,
offered income on 1
1
lakh,
lakh, so
but that is the assessable value.
But sir, that 1
The-
lakh
the-
is the amount of the laptop because
Yes.
what he has got.
Yes.
So
That is a non-monetary amount, possibly in my view, because 100 rupees, otherwise his accounts will not match, no?
Yeah, that's
asset to income. Sir.
yeah, asset to income. Then again,
Na, हाँ,
so that is 100 or 1 rupees, and if not booked, then it will be fully unexplained income again.
yeah, you wanted to say something.
Yes, yes.
Yes.
So to just to book at 100 rupees and taking claim of deduction also we can do. Otherwise, according to him, I can suggest according to him, just book the asset at 1 rupees, what he wanted to do, and offer the income 100 rupees because 100 rupees is the income as per income tax. You have to offer 100 rupees.
The income has to be offered at 100 rupees.
Yeah, income has to be offered at 100. But in according to him, what he wanted to do, he can book at nominal value of rupees 1 or whatever his
So again,
choice.
it will to distort the double entry system. Like,
But you
one-
wanted to do the better, you can do that recognizing the asset at 100 rupees and showing the income 100 rupees.
Okay.
Am I right?
In my view, this is the right, I mean, what he has said, but maybe practically you have to further analyze how you want to do it.
Okay, sir.
Suppose if any employee gets some shares, ESOP schemes, based on ESOP scheme, it was granted, and after 3 years when it is vested, and it is not an Indian shares, it is a foreign shares. And at the time of vesting, there is a perquisite, and company is deducting tax and giving the net of shares to the employee. It's again, it is on virtual digital asset because it is on some portal, because it is not in a physical form because it is outside India shares. So it happens in the employee that who are not educated that way, they should show this as a foreign income, foreign asset, but instead of showing, they don't show this as a foreign asset in their ITR. But the income means on their perquisite is there and tax deduction is there, that has happened, and they have offered to this income, they have offered to tax. But is there any chance that for not showing that as a foreign asset, there is a chance it could be classified as a unexplained or assets or like that?
Yes, ma'am. If the amount of that particular investment is above a threshold limit, if that is the case, then you may get a notice under the Black Money Act.
Yeah, but,
But
he has already paid
no,
tax
he has
on
paid
that.
taxes, but there is a disclosure requirement of foreign
Yes.
assets. And what you are saying, if I am able to understand, you are getting ESOPs, the ESOP of the foreign company.
Foreign company.
So there are demat accounts which the company provides on vesting
Yes.
also, because you will be getting dividends on those shares also.
Right.
So that dividend income also has to be booked in your books. That
Correct.
dividend income would be there only in the foreign demat account.
Correct. True.
So when you get the demat statements of the foreign demat accounts, those incomes have to be declared in your return of income.
Yeah. That
Because
might
because
be.
in a way you are doing two mistakes. One, you are not declaring your foreign assets, and all the income that is to be recognized in your accounts are not being recognized.
Yeah, there are two parts of it, if I would say that way. Suppose that has granted and there is a vesting period of 2 or 3 years, and upon expiry of that 3 years, that shares are getting vested. So what I am talking about is that vesting in the year it has vested, because dividend would come after 1 year. So in the first year, if any employee means forgets, or they don't know actually, forgets to show this as an foreign asset in their ITR, is there any chance of getting any unexplained asset notice?
You will
Or
not be getting notice for unexplained asset, but you might get a now
There is a
notices are coming.
demat
Now there are notices coming in wherein there are information sharing from USA also, wherein if a person is having a demat account there and has not been disclosing it here, you might get a notice.
Yeah, people are getting
Yes.
notices, but actually they are paying tax by way of
Fine, if
perquisite.
that be the case, if you are able to file an updated return, it's better to file an updated return for proper disclosure, because here there would not be any monetary loss to the department, but your disclosure requirements are not being fulfilled.
Yeah, but only because of disclosure requirement
Yes,
can they
yes,
ask for demand,
yes,
means
yes.
only disclosure is
The
okay.
addition would be made under Black Money Act, because you have not made proper disclosure of the foreign assets. Vivek sir would
So
be
then it will be a double
giving
tax.
a better
means.
Correct.
perspective of the same.
Yeah. No, I think I concur with Saurav, because it is not double taxation. Black Money Act is a penal provision for non-disclosure. That is why I think this nudge
Yes.
campaign, many people are getting notices where
Yes.
there is sharing of information. Many are not getting notices also because that information has not come.
Right.
Yes, sir. So in most of the cases, sir, where the ESOPs are vested, the value becomes more than 10 lakhs.
Yeah.
The assessee unknowingly makes non-disclosure and he is trapped. And even if you make representation before the authority, they will say nothing doing. There was a disclosure requirement which you have not fulfilled. You have to make a payment of.
Because since
penalty.
it is a not Indian shares, they don't trade with that shares. They just get that, means in the ITR or in the Form 16 it has come as a perquisite and a deduction of
I
TDS.
am taking
but
your discussion one step further. You ask your client to sell off those shares, he will be getting capital gains. You have to declare capital gains also.
Yes,
So
that
his
will be
capital is
there.
blocked. It's better for him to sell those shares and get the money transferred to India. He would be in a better position, and there would be disclosure requirements also.
yeah, that disclosure requirement is there, but it is up to them whether to sell or not.
No, but one point from her, this now, if this has happened, now ITRU can only be filed to pay some money, tax, right? Here I have no liability. There is only a disclosure which I have not done. So then,
Sir, in a case where there would be a refund, they will not be able to file a updated return. But in a case where there is no liability, once they file an updated return, there might be some interest element to it. Then they can pay that interest part, and then they can file an updated return. So even if updated return cannot be filed, because once that notice comes, then we will have no option. Even current notices also, they are saying that it's better you file an updated return for 25-26, where there are foreign investments and people have not disclosed it.
okay, so you are saying just show some amount as payable in the
In case there-
ITRU.
no, not by fudging the accounts. In case there is an interest amount, even if 234BC interest comes, liability comes, still we can file an updated return.
And in that
Yes.
ITRU disclose
Yes,
this.
yes.
Okay.
Updated return or a revised?
So revised return would be
timeline
filed only
has-
if time permits.
Yeah.
If
Time
time
bound.
does not
Okay.
permit, then you will not be able to file.
Time is within 31st.
Sir, if case maybe.
Actually,
No, last year if he has not disclosed,
yeah,
so
it is
last
for
year
2-3 years
gone.
they have not disclosed and now they get it
So you
done
can
here.
file your updated returns in the last code, because they have increased the tenure of the updated return. If it allows you file updated return, it's better to be on the safe side.
Right.
Coming back to our topic again, I guess we have completed the aggregation part. Now we come to set off carry forward and set off of losses. We'll run through these sections because there are no much changes here. Major changes are just because of wording. What they have done, they have done away with the provisos and the explanation, and they've included it in the section itself. So we quickly run through those if anybody has any query, so that we'll take it up later. Section 70 corresponds to section 108 of the new act. Set off of losses from one source against income from other source under the same head of income. Set off of losses under the same head of income. Nomenclature changes. The language has been simplified. I just go through section 108. Unless provided otherwise in this act, for any tax year, if net result of computation from any source under any head of income other than capital gains is a loss, then assessee shall be entitled to set off such loss against his income from any other source under the same head for that tax year. Where the net result of computation of income made for any tax year under section 70 to 90 is in respect of any short term capital asset is a loss, such loss shall be set off against the income computed in respect of any other capital asset for that year. Where the net result of computation of income made of made for any tax year under section 72 to 90 in respect of any long-term capital asset is a loss. Such loss shall be set off against the income computed in respect of any other long-term capital asset for that particular year. The language has been made more simplified if we go through if we compare the old act with the new act, but there are no substantial changes in the provisions of the law. Similarly, section 71 set off of losses from one head against the income from another, set off of losses under any other head of income. The language has been simplified. It has been simplified to a very large extent, wherein the old act there were number of subsections and the clarity was not there. They have made it very simple. Carry forward of and set off of loss from house property. Similarly, the language has been changed. There is no substantial change in law. Carry forward and set off of business losses. Where any assessment here. Similarly, the losses, set off and carry forward losses, there are no changes at all, if I may say. Subject to correction, what Vivek sir would say, only the language has been simplified. There are no much changes. Similar thing with unabsorbed depreciation and accumulated depreciation. There are no changes. If you have any questions, we can stop and we can answer the questions. I'm just running through the sections. There was one FAQ by the income tax department in respect of change set off and carry forward of losses due to amalgamation. Will the changes announced in the recent budget speech pertaining to capping the carry forward loss in the amalgamation and business reorganization provisions be included in the income tax bill 2025? Yes, the proposed simplified income tax bill has included such amendment provisions in the income tax introduced by budget 25. The provisions of law as it is were as was in the old act. There have been no changes. Carry forward and set off of accumulated loss and unabsorbed depreciation allowance in scheme of amalgamation in certain cases. Language changes, act remains the same. '73 similarly. Specified activity also, it remains the same. 119 is the same. 79 set of carry forward of loss in certain companies. It is all the same. There is no changes. So for set off and carry forward of losses, there are no much changes. So I will section by section in this presentation. You can see compare the language of both the acts. The language has been made more simpler. Otherwise, there is no substantial change in law. So this section ends here. So in case there is any question regarding this.
No, here I also don't have anything. Any participant, if any questions are there. Online participants, till now, if you have any questions, you can unmute and ask. You can show that online participants. Okay, no questions it seems from online also.
So we now move to the deductions part.
Hmm.
Here also there are not much changes. The language has been more simplified. ATC has been, there were n number of subsections. Now those have been inculcated into one section and there is a separate chapter on the same. So there are no changes per se which majorly affect us. So we will just quickly run through. 88, there is one similar change. What had happened is section 88 in the old act sets out general framework for deductions under chapter 6A. These deductions are allowed from the gross total income subject to the overall cap that the total deductions cannot exceed such income. As in section 80C, the cap is 1,50,000. Subsection 3 of section 80 specifically addresses situations involving an association of persons or body of individuals. It provides that where a deduction under certain specified sections such as section 80G, 80GGA has been allowed in the hands of AOP BOI, the same deduction cannot be again claimed by its member in respect of their share of income from the AOP or BOI. What has changed is in this case they have the Income Tax Act 2022 addresses this gap. Section 122(3) corresponding to section 80A(3) of has now expanded to include section 142A, wherein once deduction has been claimed by the for housing projects has been claimed and allowed in the computation of income of AOP or BOI, the same deduction cannot be claimed again by its member. There is only change. Earlier there was a gap wherein AOP as well as the individual could have claimed deduction for both, but here this gap has been plugged, and only if AOP has taken that benefit, the individual cannot be taking benefit of that particular section. There was a FAQ issued by the department concerning this provision. What are the major snapshots of simplification with reference to chapter 6A? In this chapter, the existing provisos and explanations have been integrated into the main sections, improving clarity and coherence. Large and complex sections such as section 80C have been streamlined, and detailed provisions have been moved to schedule 15 for better presentation and comprehension. Further, the provisions of section 80IA, IB, IAB, IBA of the income tax would still be applicable for the undertaking or enterprises or projects which were eligible to avail deductions as per these sections, which is ensured in by incorporating necessary savings and repeals clause. The tax incentives under chapter 6A of Income Tax Act are not available in the new tax regime. Has the same approach been adopted in proposed legislation? There are several provisions for which sunset date had earlier been outlined in Finance Act 2016. Hence, the deductions for the same is available till such date. However, investment linked deductions have not been phased out. Hence, deduction under 80C, 80CCD, 80D, 80DD, DDB find place in the new income tax bill. See, as we can already see that the government is now moving towards a phase wherein in the new regime majorly deductions are not available. So, we may see in future that the predominant scheme would be the new regime wherein the deductions would not be allowed. So, these deductions as it is till the time we are being able to file the old income return under the old regime still persists. Otherwise, once the department takes a view that no, everybody has to shift to the mandatorily to the new regime, these deductions would have no place. 80AB, there are no changes. 80AC, 80B, their definitions are there. 80C, similarly there are no changes. 80C has been now split into 3 sections. 123 for deduction of life insurance premium deferred annuity, schedule 15 wherein the detailed chart is given regarding where we can avail the deductions and what are the limits, and section 2 the definitions. I have already gone through the FAQ. Again I will go through the FAQ regarding 80C. What major restructuring has been done in section 80C? The various sums eligible for deduction under 80C which were previously spread throughout the section have now been transformed into a simplified arrangement of eligible shaving instruments in the proposed schedule 15. The deduction limit remains clearly stated within the section, which while the schedule provides an easy to understand breakdown of eligible deductions. These simplifies the process for taxpayers, making it more transparent and organized. The changes have been made for better accessibility and comprehension. There is no change in 80CCC, no change in 80CCD regarding pension scheme of central government, no change in 80CCC, 80CCH. This was in respect of Agnipath scheme. This still stays the same. There is no change in 80D as well, only the section has been split. The definitions have been separately incorporated in section 2 and deductions in respect of health premium has been given in section 126. 80DD also there are no changes in respect of medical treatment of dependent. 80DDB also there are no changes. 80E also there are no changes. 80E also there are no changes. 80EA also there are no changes. I am just going through the new old sections for better understanding. The corresponding sections are already given in the slide. 80G, In the 80G there are changes. I would say for the purposes of deductions there are no changes, but 80G there is a entire revamp. What has happened is earlier 80G also included with respect to approvals of non-profit organizations, educational institute, those have been streamlined. What they have done is they have introduced comprehensive and self-contained regime for non-profit organizations. The Income Tax Act has introduced fundamental restructuring of the entire charitable and religious entities. So what had happened is earlier there were segregated parts. Definition was there in 215, exemption conditions were there in 1023, donor deductions were there in 80G, tax on anonymous and specified incomes were there in 115 BBC, and aggregated income was there in 115 TD. What has happened is now everything has been unified. The 2025 Act replaces multiple expressions such as trust, institution, university and hospital with a single defined term, registered non-profit organizations. An entity qualifies as an NPO only if it meets prescribed eligibility conditions, obtains registrations, complies with the regime requirements. The dual system approval under 1023C and registration under section 12AB has been eliminated and replaced with a single registration framework. So now the provisions regarding NPOs are contained in section 332 to 355.
So I think this is welcome. Dual registration,
Yes.
first 11 there is separate, 80G separate. Now only one registration.
So the entire mechanism regarding registration and exemptions have been now simplified. However, in respect to deductions, there have been no changes. The 80G deductions remains the same as was there in the old law.
But what about the old registered trusts who have got both the registrations? Okay, so one registration under that 12A that after 5 years has to be renewed. 80G also.
Yes, it has to be renewed after 5 years.
It had to be renewed. So now, if that 5-year period that falls in the new regime, then
So in case we have not been, we don't have a clear roadmap of the same, but in case if the trust or the institution is registered under both, they can file for a unified registration wherein they can give details of both their registrations and can get one unified. If there is a case of only one registration, they will be getting only one registration.
so I think when re-registration
Yes.
comes under any of them, first section
Yes.
11 will only come. So at that time, the form will have a unified
Yes.
re-registration.
Yes. Since we are not aware of the forms that under the new act, so let's see. 80GG, no changes. 80GGA, there are no changes. We were expecting changes for 80GGB since a lot of mails people have been receiving regarding contributions to political parties, but there have been no changes in the law. In the new act also it remains the same. We will see later on how this progresses, because 80GGC there have been a lot of deliberation regarding deductions and for contribution given to any political party. 80IA remains the same, there are no changes. Special economic zones, no changes. 80IB, no changes. 80IBA regarding housing projects, I have already elaborated that. 80IA regarding the gap has been plugged and the AOP can only avail the deduction and individuals will not be getting that deduction. So there is no much changes. 80IA, there are no changes. 80JAA regarding employment of new employees. There was an FAQ by the Income Tax Department. How has section 80JAA or the provisions relating to startup or IFSC has been addressed? These provisions continue to be in operation in the new income tax bill. So substantially there is no changes.
146, section 146.
Yes, sir, 146. Similarly, 80LA no changes, 80M no changes, 80P there are no changes. This is also a very litigated chapter, but there have been no changes. 80QQB there are no changes. RRB, regarding patents and royalty, there was one FAQ by the department. How has section 80 RRB been simplified? The definition of eligible SSCs who can claim deduction on royalties earned from patents have been made clearer. Additionally, the language has been modified to explain the computation of the deduction amount. So here also there are no substantial changes. As I had said while starting my deliberations, the department has tried to simplify the language so that they want to do away with the litigation part. But let's see what happens to this effort of the department. Earlier there were two sections regarding ATTTA and TTB. They have been now unified under one section, section 153B. There was an FAQ by the department, section ATTTA and TTB. What changes have been made to sections ATTTA and TTB? Previously, sections ATTTA and TTB provided deductions on interest earned from savings account, ATTTA for general public and ATTTB for senior citizens. These sections have now been merged into a single proposed section with clearly defined subsections. The eligibility criteria and deduction limits for different categories of assessees are now explicit, reducing the need to refer to multiple sections. This change enhances clarity and ease of use, particularly for senior citizens. So, my deliberation on deduction ends, I guess. If anybody has any query regarding deductions, we can take it up now.
Can you flash this?
Ms. Dimple, will you please switch on your video and ask the question? Yes, I'm reading out. Is deduction under section 80M available under the Income Tax Act 1961, available under the new Income Tax Act 25?
There is no change.
I guess initially in finance bill, there was no provision for deduction under section 80M. So I had a confusion whether it will be available under Income Tax Act 25.
I guess it is repealed now, ATM for Act. On that.
You have internet connection?
Internet connection we have.
पुराना एक्ट में हट जाता है.
ATM is 148. Intercorporate dividends.
Okay, there is no change.
Yeah, 148 ATM.
Okay, thank you so much.
So, is there any other query in respect of deductions?
Any other query in respect of deductions or earlier aggregation, etc.? Any other topic which we have discussed today? You can go forward.
So, we move to the last part of my deliberation, that is, these are the miscellaneous provisions. Here also, wherever there are important issues, I'll discuss, otherwise I'll move through. 281, certain transfers to be void. There are no changes, only the word of language changes. Similarly, 281B, provisional attachment to protect revenue and interest in certain cases. There are no changes. Section 282, service of notice. There are no changes as such. Only in the definition of electronic mail and electronic mail message has been included. Why this has been done? Because earlier it relied on Information Technology Act 2000, which was cross referenced in the old act. Now, since that has been omitted with effect from 30th November 23. That is why the definition of electronic mail and electronic mail message has been directly included in the section itself, so that there is no ambiguity and there is no cross referencing with the Information Technology Act.
No, here, Saurabh, I have, you can say, doubt or
Yes, sir.
comment. If you see 282, I think we also should mention the ITA 25 section correspondingly.
Yes, sir.
So section 501
Hmm.
versus 282.
Yes, sir.
Why I say this? Because service of notice is of lot of importance.
Yes, sir.
You see, under 282,
Hmm.
I will just read out briefly 282.1. Service of notice or summon or requisition or order or any other communication under this act may be made by delivering or transmitting a copy thereof to the person named therein.
We can see the screen because it's there.
Yeah.
What sir is reading is
Okay, yeah, it's there. Now see here, A, there are 4 modes
Yes, sir.
of service of notice: by post or courier services as may be approved by the board, or in any manner provided under CPC,
Yes, sir.
or in any form or of electronic record, or by any other means of transmission, right? So now this or, they have reduced the word or
Yes, sir.
from each of the clauses, which I am not sure if it is intentional or it is just to simplify, because there have been a lot of discussion now in CBDT also because of these ex parte orders,
Yes, sir.
which actually the email ID and mobile number both are wrong, or relating to some consultant or something, going to the consultant not reverting or something. So now does it mean that they have to give electronically, they have to serve the notice electronically as well as by post?
Sir, removing the word or means the same. Means they will have to give by both by mail as well as by post. Otherwise, in the old section, or means they could have serviced the notice either by any of the 4 mechanisms. So by this change is an important change, wherein they will have to give both by post as well as by electronical transmission.
I think this all of us should note, this section 501 vis-a-vis 282, because just in case there is an ex parte order in any small subsidiary or any small taxpayer where we have not received the notice, etc., we can always take this ground, at least in the new act, where you have to at least serve. And very recently also there have been many judgments. I think Madras High Court, in the case of Sahiti Enterprises, it has said that even electronically, if the SSE is not coming, why doesn't the charge officer or the JCE calls up the SSE, where he knows that the SSE is in existence?
Sir, it is for this particular reason what has happened. Earlier, the time limit to file the appeal before the ITAT was 60 days from the date of the order. What they have done, since now the communications are entirely through electronically, what they have done is the date starts from the end of the month in which the order is passed.
Right.
So maybe taking cue from those changes, we can come to a conclusion that the order, in case of an ex parte order, has to be served by both by post as well as electronically.
Right.
So I have already explained. Now we come to section 282A. There are no substantial changes, but I would like to point out a few case laws which are very
Okay.
necessary for this particular section.
This is 2025 502.
502. 282A of the old act vis-a-vis 502 of the new act. This relates to authentication of notices and other documents. See, this section becomes very important since now there is a shift by the department from manual to electronic. I would cite a case law, Allahabad High Court case law. In the case of Vikas Gupta, what had happened, there was a very tricky case. it was a 148 case. The approval was granted by the sanctioning authority on the last date at a particular time. I guess the time was somewhere around 5:30 in the evening. Interestingly, the assessing officer issued the notice under section 148 before the sanction. So the Allahabad High Court held that no, these proceedings are bad in law, because when you did not have the sanction, how could you have issued the 148 notice? Now this becomes very relevant or important in today's time, because we nowadays whenever we receive any notice, it is imperative upon us to check whether that notice has been signed digitally. In most of the cases, in a case of 148, majorly the notices, the approval of the principal CIT given to us are not signed. There is a judgment of the Mumbai ITT in the case of J. Kumar Infra Projects. It's a very detailed order. I guess the order runs into more than 100 pages, wherein they have cited the approval of the principal CIT, wherein that approval provided to the assessee was not signed. The tribunal took note of that fact and allowed the appeal of the assessee. That said judgment allowed the appeal of the assessee in various parts, but one of the submission of the assessee was that the approval of the principal CIT was unsigned. So even in the new act or the old act, it is very important to see that the orders issued by us are signed. In many of the cases, the principal CIT specified authorities, the orders are not signed. Recently, in a case of Calcutta Tribunal has also allowed the same in 180 taxman.com 403. The order was unsigned. So maybe there are no changes, but we need to see that since now we are moving towards electronically, approvals are taken online. Most of the time the specified authority approvals are not signed or the date. It is very important for us as consultants to see whether those notices are signed, the time limit, time stamping, because now everything is before us. It's not there that we have to ask for the AO. All the documents, the notices and the specified materials are provided to us. So it becomes very imperative on our part to check and look after the notices so that we can advise our client better. Now coming to section 283, service of notice when family is disrupted or firm is dissolved, there is no substantial change of law. Similarly, in the case of discontinued business, there is no much change in law. Submission of statement by a non-resident having liaison office, no change. Furnishing of information or documents by an Indian concern in certain cases, 506, no change. Submission of statement by producers or cinematographer films, no change. 285 BA, obligation to furnish statement of financial transactions. This stays the same, there are no changes. 509, obligation to furnish information on transaction of crypto asset, no changes. Annual information system, no changes, only the language changes. Furnishing of report in respect of international group, 511, erstwhile 286, there are no changes. The definition of alternate reporting, alternate entity, all remains the same. Publication of information respecting assessees in certain cases is the same. Appearance by registered valuer in certain matters. There is a change wherein they have broadened the scope of registered valuers. The Income Tax Act 2025 continues the same substantive framework. Section 513 corresponding to 287A permits an assessee to appear through a registered valuer in valuation matters, except where personal attendance for examination on oath is required. However, the significant structural improvement has made the term registered valuer is now expressly defined within the Act itself. Earlier there was not there, because even registered valuer could not have appeared before in appellate tribunal. Now they have included it. The 2025 Act provides a self-contained mechanism for maintenance of register of valuers, eligibility and registration for specified classes of assets, prescribed application procedures, statutory declaration regarding impartiality. The authority to grant registration is vested with the principal commissioner, that is the same, so there is no change. Appearance by authorized representative, there is no change. There is no substantial change in the provision income tax. Similarly, 516, there are no changes. Rounding off. Indemnity, there are no changes. Power to tender immunity from prosecution, there are no changes. Cognizance of offences, no changes. Probation of Offenders Act, no changes. Return of income not to be invalid on certain grounds, there are no changes. Notice deemed to be valid in certain circumstances, 292BB, there are no changes. 5 presumptions as to asset books of accounts, etc., there are no changes. Authorization and assessment in case of search or acquisition, no changes. Power to make exemption in relation to participation in business perspective, nothing, there are no changes. 528 also, there are no changes. Power to withdraw approval, no changes. 532, power to frame schemes, this is in respect of faceless assessments. This also, there is a shift. What has happened is, earlier the 1961 Act, when it introduced faceless mechanism, there was a system of team based assessment, team based functioning there was there, but in 2025 it has consolidated all the scheme making powers into a single provision. It has authorized the central government to frame schemes for any purpose, wherein eliminating the interface with the taxpayers, optimizing use of resources. Team based functioning and dynamic jurisdiction are no longer stated as general objectives. What has happened is, they have separately made 2 sections for faceless jurisdiction of income tax authorities as faceless as collection of information, that has been moved to section 245 and 260 of the Income Tax Act. If to make it simple, what has happened is, it has simplified the legal structure by replacing numerous sections, making powers with one broad enabling provision, while the focus is now primarily on faceless interaction and efficiency. Otherwise, the law remains the same. There are no substantive changes in law. There was one FAQ in respect of this. Has the faceless approval or registration been removed? The answer is no. 530, there are no changes. 531, there are no changes. 533, there are no changes. There was FAQ in respect of 533. Will new rules and forms be prescribed for the proposed bill? The proposed act has been laid before the Parliament. Subsequently, the administrative measures for implementing them will be made operational in terms of the provisions in the new income tax bill. The necessary details will be informed in due course. Whether the bill gives additional responsibility to CBDT to frame tax administration rules, to introduce compliance measures and enforce digital tax monitoring systems without requiring legislative amendments. Section 295 of the Income Tax Act already requires CBDT to frame rules for carrying out the purpose of the Act without prejudice to the generality of such powers in subsection 1. Specific matters are also enumerated in subsection 2 of this section. Clause 533 of the Income Tax Bill replicates this responsibility, which are already conferred on CBDT. So, there are no changes in law. 534, laying before the Parliament, it is the same. 535. So, all the miscellaneous provisions also have been dealt with. I guess there are no such changes in law. So, I would like to end my deliberation here.
Yeah.
Yeah, are there any queries in respect of the deliberation till now?
Any queries from any participants? Online? Nothing. So we can take a small break of 5-10 minutes and then reassemble.
My concluding remark would be, the real question is not where can we read Income Tax Act 2025. The real question is, can we stop thinking in terms of 1961? That is the main issue. So, what we need to do is, first we have to unlearn 1961, though the provisions remain the same. The wording of the Act changes. So, we also have to change according to the language of this section. So, thank you.
Thank you, Saurav, for this wonderful deliberation. We have a pleasant task to perform. small memento for you. Thank you. Online participants also, you can have some refreshments at your own offices, while we also have over here some. We have just completed our session, so we are taking some refreshment, 5-10 minutes to start work. So we will end with a bang with your session. So the last 5 days, we are continuously replacing.
Function is going on.
Unless the rules are framed. Sir, what happens is, nobody has got the capacity. I think very few like you and all can read through the whole act at one go. Otherwise, nobody has the capacity to read the whole act at one go at one time. This is very important. And then to distinguish. And that is the worst most difficult part. So this gives a platform for everybody to have a macro. कि हाँ कहाँ पे क्या क्या है, overall क्या क्या changes है. Now when the rules come out,
Thus, our next speaker, Advocate Sir Sumeral Surana. So I request Mr. Jalan, our chairperson, to please take it forward.
Yeah, thank you, Shorvani, and welcome, sir, to Bengal Chamber of Commerce and Industry. Friends, Mr. Surana does not need any introduction. For all of us who have been working in income tax space since the last 15-20 years, we have been seeing, sir, we have been learning from the various judgments in various courts where sir has argued, and learning from those judgments. So we are privileged to have sir before us, and sir would be taking the chapter 21 and chapter 22 on penalties, offences and prosecutions. So sir has also sent very kindly a detailed note on the comparisons that has been handed over to you. Online participants, it has been provided to you on mail also. So we can refer to that as we go through sir's deliberations. Sir, over to you. Mic ले लीजिए. लगेगी.
Shri Vivek Ji Jalan, convener of this workshop, my fellow speaker Saurabh Gupta, brothers, and all my professional brothers. You must have heard from Saurabh that practically the same wine has been put in the new bottle. There is nothing to say about the new Income Tax Act because they have simply either changed the words or taken out the explanation or omitted the provisos. But whatever were there in the proviso or explanations that have been brought in by way of sections or subsections. They might be saying that we have हमने इतना हटा दिया, this is not there, but everything remains there. While doing so, some violence has also been done with the words, and that will be now subject to the interpretation of the courts, but litigation is going to go up. Chapter 21 and 22 has been given to me. Basically, there is practically no change. In place of section 276 to 279, they have brought in new section 439 to 472. I have given a brief note. But the start is from section 439. That is with regard to underreporting or underreporting by way of misreporting. They have done much violence to this section. If you see section 439, the language used is that the competent authority during the course of any proceedings may impose penalty if there is underreporting of income. Underreporting may be misreporting. So this language says that the penalty has to be imposed during the course of assessment proceedings itself. Whereas the language in 270A was, if the assessing officer, at that time competent authority was not there, assessing officer during the course of proceedings feels that the assessee is liable to penalty, he may direct that penalty will be imposable. So that means a notice was to be issued that penalty will be imposable, and the section 275 was there that penalty is to be imposed within 6 months, or if there is an appeal or tribunal, then within 1 year from the end of the receipt of the order. That 275 section that remains, but I don't know how this 275 section will work out, because the beginning itself, section 439 itself says that penalty has to be imposed. May I read that for your The competent authority, now kindly listen, may, comma, may means distinctive. During the course of any proceedings under this act, impose penalty on any person who has underreported his income, and such penalty shall be payable in addition to tax. So he has to impose penalty during the course of proceedings itself in addition to the tax. So simultaneously he has to impose. But that is not the intention of the act, never was the intention, because then the question of stay, if I have filed appeal before the appellate authorities, penalty, imposition of penalty is to be stayed. That is what section 2, earlier section 275 said, and the resultant section also says like that. So where is the question of stay when penalty has to be imposed? And if this is not amended, then I can tell you never any penalty will be imposed, because unless the tax is determined, how can you impose the penalty? And when you will give the opportunity of being heard, the SSC has to be given an opportunity of being heard before imposition of penalty. So whatever the finding of the assessing officer is there in the assessment order, on that basis we will fight only. That look here, this is not misreporting, this is not underreporting. This is the violence done. Otherwise, all other sections, you can see what they have done is, in the earlier section, rupees 1 lakh, 100,000,000. Now they have used ONE1T as in words, that's all. That is the change. So 439, except this violence, the rate continues to be same. There would have been a better proposition. You see, where misreporting there are at least 6 clauses, and dispute have been going on that when they are giving the notice, they must identify under which clause I am falling. This, how that problem could have been solved, that is not given here. Opportunity of being heard has to be given. Now I don't know if the rules are prescribed, and there they might say that the prescribed format for imposition of penalty is so and so, and that prescribed format all the 6 clauses are given, and then the assessing officer takes that column. May be done. But you see, rule cannot supplement the provisions of the act. Provisions of the act will prevail. What I say is that the dispute will continue, rather under the new act more disputes will be there. Then next is provision for immunity, application to the AO under section 439, not to impose penalty if I have paid the tax and filed the application, not to impose penalty, and no prosecution should be there. That was earlier section 270AA, now this has become 440. The AO was to impose that, AO was to give that relief, and here also AO continues. Section 441 in place of 271A, same penalty, earlier assessing officer, joint commissioner and CIT appeal, now joint commissioner doesn't remain, only AO and CIT appeal remains. Then if a person fails to keep or maintain information and documents in respect of certain transactions, 271AA, in place of that 442 has come. Everything remains the same. Then 271AAC, that also remains the same. Penalty, income to be assessed under section 115 BBE, and then penalty of 10% on such tax payable, everything remains to be same. Then 271AAD, penalty for false entry in the books of accounts, that is section 444. In place of AO, JC18, CIT appeal, all the 3 have been given the powers to impose penalty, and the same person were there, same authorities were there earlier. Then benefit to related persons for NGO, it also remains the same, AO and AO is to impose. Then section 446 in place of section 271B, that equal to 5.5% of the total sales, turnover, gross receipts, that deduction was there. So that also remains the same. 271BA, in that place section 447 has come, that the change is only from 1 lakh to rupees 100,000 rupees, that's all. Then section 448, failure to deduct tax at source, joint CIT was to impose, equal to the amount of tax which was failed to be deducted, same provision remains. Then 449, equal to amount of tax of which was failed to collect, that is failure to collect the tax at source, 271C earlier, now the same also remains to be same. There is no change in language also. Then 450, the failure to comply with the provisions of section 185, that is earlier 269 SS, it is same. And so also the additional commissioner or joint commissioner to impose penalty. Then section 271DA, that is 451 has come, failure to comply with the provisions of section 186, that is 269 ST, joint commissioner, same person continues. Then section 271DB, failure to comply with the provisions of section 187, 5,000 for every day, during which the failure continues, it remains the same. Then section 453, failure to comply with the provisions of section 198, that is 269T, earlier it was section 271E, the same penalty continues. Then failure to furnish statement of financial transactions, 500 per day, the penalty was to be imposed earlier by prescribed authority, now also by the prescribed authority. Then furnishing inaccurate statement of financial transactions, this also remains to be same. Then fails to furnish a statement or information or documents by eligible investment fund, that is 5 lakhs, it also continues to be same. Then 271G was there, failure to furnish information or documents under section 171, that also continues to be same. Then 271GA, failure to furnish information or documents under section 506, that is 285 earlier, 2% of the transaction value and 5 lakhs in any other case, continues to be same. Failure to furnish report for furnishing inadequate report under section 511, earlier section 286, this also continues to be same. Then 271CG, failure to submit a statement under section 505, earlier section was 285, same 100,000 rupees per day and same assessing officer to impose. Then 461, this also failure to furnish certain statements, it also continues to be same. Then 462, failure to furnish information or furnishing inaccurate under section 397, earlier section 195, 271I, it also continues to same. Then 271J, see only this capital letters used, sections that has been changed and serial number has been given. So also 440, 464, 271K has come, 465, 272A in place of that it has come. Then 271, 272 AA, for that 466 has come. Then 272B, 467, 272BB, 468, then 273A, that is 469, then 273B, 470, and then 471 procedure, that is 274, and 275, 472, that limitation of 6 months. So everything continues to be same. So also in prosecution, एक काम जो prosecution में किया है, that is very dangerous, which was not there earlier. You must have noticed that. If there is a search, 115 BC new chapter has come for search in the earlier Finance Act. In 153A, even if a notice is issued for filing the return, if you have not filed the return, the prosecution was not there. But here, this prosecution has been brought in. If you have not submitted the return under section 115 BC, they have brought in a provision, that is 480. Section 480, if there is a search and if you have been given notice, then you must file the return within the time allowed. Otherwise, there may be prosecution for 3 years and there may be fine even. And this advantage rather the assessing officer will always take. So, we have to be very careful if there is a search. Then section 276A, if there was a company in liquidation may be through NCLT or maybe voluntary liquidation or anything, information was to be given to the department. That provision has been taken away. There was prosecution under section 276A, but there is no corresponding section. Then there was a redundant section, that 276AB. If you remember, you people don't have seen that provision. Acquisition of property. A provision came sometimes in 1969 and that remained for about 10 years. If you have purchased any property, then the government was authorized to buy that property by paying you 15% more. The difference was more than that. Then the government was entitled to buy that property from you. That provision was only for maybe about 10 years. So, if you don't give possession of that property to the government, if they buy it, then there was prosecution. Since that provision itself doesn't remain, then naturally that section has no value. Otherwise, more or less, same provision remains right from say section 473 that started from 275A and ended at 491, ended with 279, earlier 279 and 491. Earlier it was shall be liable to fine, now अब उसको shall be liable की जगह with fine कर दिया है. That is the only change, otherwise no change. But one thing I found, I could not spell out each and every section. सब sections में language का थोड़ा थोड़ा कुछ किया गया है. If you go deeply, there may be some different meaning. Even in penalty sections, even in prosecution sections, they have tried to synchronize the sections कि भाई इसको word छोटा कर दो या दूसरा replace कर दो word. But in that replacement, some other interpretation may also come. That all depends at the time when we handle a particular case, because it depends to match the effects with the particular provision that has to come there. But there will be violence, निश्चित. अभी मैंने एक देखा था एक मेरा केस, तो मैंने देखा नए एक्ट में उसका क्या है, नए पुराने में क्या है, तो आई फाइंड कि अगर if I fall in new act, I will be rather better in a better position.
Okay.
Because the word used is very loose. It may have different meanings. So this is all there in penalty proceedings. Otherwise also आप देखिए ना, I could not find any distinction between the two. आपने 54 EC का देखा है क्या?
नहीं.
So see what is there in 54 EC. Compare the section with the earlier section.
If you can deliberate on that, sir, I mean, it will be value added for us. I'll just open. EC 85.
Now kindly read out 54 EC. आपके पास वो पुराना
है,
एक्ट होगा.
पुराना भी है इसमें.
या इसमें दे रखा है क्या?
हाँ, ये पुराना है.
See 54 EC, what it earlier read. Where the capital gain arises from transfer of a, kindly note this down. Transfer of a long-term capital asset being land and building. And the new action says where the long-term capital gain arises from transfer of land and building. The word there was long-term capital gain being land and building. But now let us see what is the difference. You see, if I sell some land and building which was my business asset, then for the purpose of computation of capital gain, we used to say it is a long-term capital gain. We will pay tax at that rate only. Though I might not be getting cost or indexation cost and all that, because after all it is short-term capital gain under the provisions. But so far as computation is concerned, it will be taxed on the long-term capital asset because of that language. Now they have simply said where the capital gain arises from transfer of long-term capital gain being land and building, उसको हटाने से वो काम खत्म हो गया. Now you cannot 54 इसी में आप इन्वेस्टमेंट कैसे करेंगे, लॉन्ग टर्म कैपिटल गेन नहीं है वो तो ये सारी लैंग्वेज है ना, ये क्या डिस्प्यूट पैदा करेगी कि साहब हम तो लैंड एंड बिल्डिंग है उसको लॉन्ग टर्म में मानेंगे, वो बोलेगा नहीं साहब वो लैंग्वेज नहीं है. सो दिस इज द प्रॉब्लम, दिस इज हाउ द थिंग्स आर गोइंग टू मूव. ऐसी और भी छोटी छोटी ये कई जगह की गई है.
On this penalty, sir, I mean, we were discussing over the last 1 or 2 days. So what we found out is this new repeal and saving clause, section 536, that says that both the under the new act, once the new act is in vogue, in case a order is passed for any tax as well as any penalty under the old act, it will be passed under the old act
It
only.
will
for
continue.
those
Whatever
years.
proceedings have been taken under the old act, that will continue under the old act.
But sir, if you contrast it with the earlier repeal section 297, which is there currently, 1962 you have dealt with that also. So that said that after 1962, when the 61 Act has come into force, the tax for the old periods will be under the 1922 Act, but the penalty will be under the new Act. Do you think this has any meaning with this 278?
No,
which you
nothing.
go-
This 536 clearly says whatever proceedings have been initiated under the old law, that will continue under the old law.
Even penalty, sir.
Even penalty, because that penalty is also initiated under the old law. So that is bound to be continuing under the old law. That cannot be brought in under the new law. The problem will be for assessment year 2026-7 assessment year I am telling. Old law will apply, and for tax year new law will apply. But no proceedings for assessment year 26-27 can be initiated after 1st April 2026. But then assessment has to be completed under the old act. All the provisions will apply. Now, if for that year, if some penalty is to be initiated for that year alone, what will be the position? Because there was no proceedings pending for that year on that day. By virtue of saving clause, assessment for 26-27 has to be done under the old law. But penalty proceedings will be initiated under the new law. What will be the position? That is still lies.
So just, sir, you are saying that penalty will be under the new law? Or
No, it will be under the old
Old law
according to me. It will be under the old law. But there is a matter of dispute that no proceedings were pending on that day. So how for the this is a procedural provision, how to and under which section penalty is to be imposed. The quantum of penalty may be same because both places same. So substantive law is not changed. Quantum remains the same. But which procedure is to be applied? देखिए क्या होता है इसका. Nobody knows. There is a way to come out for the department. There is a way to come out for the SSC. This dispute might come up.
right.
देखिए 536 को एक बार देख लीजिए. We can
536 is volume 2.
उसमें होगा ना. अरे it was 297. अब तो काफी काम किया.
मार्किंग किया हुआ है सर फर्स्ट डे में ही.
Nothing shall affect the previous operation of the repealed Income Tax Act and orders or anything duly done and suffered thereunder. Now for 26/7, nothing is done, nothing is suffered thereunder. उसके बाद में और nothing shall affect any right, privilege, obligation or liability acquired, accrued or incurred under the repealed act. Nothing has accrued. That penalty तो बात आई नहीं अभी कोई. The provisions of repealed act shall apply, continue to apply to any proceedings pending on the date of commencement of this act. Penalty was not pending. And to any proceedings initiated after 1st April 2026, including notices, assessment, reassessment, computation, rectification, penalty in respect of tax year beginning before the 1st April 2026. तो 26 से पहले तो टैक्स ईयर था नहीं. See, हम तो वो तो 20 एनी टैक्स ईयर बिगिनिंग बिफोर 1st April 26. तो हम तो आप नहीं बोल सकते कि साहब ये आपका टैक्स ईयर पेंडिंग था, तो नहीं लिखता असेसमेंट ईयर, नहीं लिख रहा है कुछ भी. They are talking of tax year, mind it. We have to go by the language. Any proceedings for imposition of penalty in respect of any tax year beginning before, वहाँ भी tax year नहीं है. They could have said that for any assessment year, but they are using the word tax year. अब now how can you import the word कि साहब ये assessment year होना चाहिए, भूल हो गया हमारा टाइपिंग में, हमारा मिस्टेक तो हो गया ना, हमारा बोलने में हो गया. No, on this mistaken language I have argued a case, I tell you. आपको याद होगा 94(7) सेक्शन 94(7) डिविडेंड स्ट्रिपिंग है ना. So the words used were there 3 months before or 9 months after. There was a case before the Calcutta bench. In my case, Mr. Swarup Chand Daga, I still remember the name of that party, Reliance Jute as CEO, Swarup Chand Daga, he purchased units in the morning of 23rd December. Dividend was declared, and then on that day itself, he sold the shares and there was loss. And the dividend was to the extent of about 5 lakhs or something. So that was caught under 94(7) and disallowed. My only argument before the tribunal, G.D. Agarwal was the member there at the time. When I just started argument, he said, "What is there in your case?" Nothing. I said, kindly listen to me for 2 minutes and that will do. Well, yes. Sir, the record date was 23rd of December and I have neither purchased before 3 months nor sold after 3 months. I have done on the record date. And record date has not been taken care of 94(7). He uttered the same word that you see this was a mistake of, but I was prepared. I said, here are 3-4 judgments that if there is a mistake in the language, only parliament can do, no court. So ये आप देखिए यहाँ सब जगह टैक्स ईयर यूज किया, असेसमेंट ईयर यूज नहीं किया कहीं भी. टैक्स ईयर बिगनिंग बिफोर, हाउ कैन इन टैक्स ईयर बिगनिंग बिफोर?
Going through the definition of tax year now again, sir.
हाँ.
So it says any period beginning on 1st April.
एनी पीरियड बिगनिंग टैक्स ईयर में लिखा है 1st April 26.
26 नहीं लिखा है सर.
हाँ, उससे पहले तो हो ही नहीं सकता
हाँ,
ना.
उसके पहले हो नहीं सकता ये.
उसमें तो
Because
टैक्स ईयर डिफाइंड
section
नहीं
one-
थी.
हाँ, section
सेक्शन
1
में नहीं
itself
था ना,
is-
पहले वाले एक्ट में सेक्शन में नहीं था टैक्स ईयर.
Right.
हाउ कैन यू से टैक्स ईयर बिगनिंग बिफोर दैट? अगर आप टैक्स ईयर अगर पहले करेंगे तो फिर
Defined ही नहीं है.
फिर तो 25 में भी आज 4 साल का ओपन करेंगे पीछे होगा.
Correct.
अभी तो रीओपनिंग प्रोविजन जो किया है 3 years and 5 years को 4 years and 6 years टैक्स ईयर, बट इट अमाउंट्स टू सेम थिंग. सो इफ आई टेक योर इंटरप्रिटेशन तब तो वो 1 साल आगे चला गया. So this is how the language is there.
Right. So any queries, any questions from your practical cases also, any participants?
एक चीज़ मैं क्वेरी करना चाह रहा हूँ कि 27 ट्रिपल ए जो है इम्यूनिटी के लिए, मेरा एक केस असेसमेंट हुआ, हाइपोथेटिकल एग्जांपल, असेसमेंट हुआ, आई एम सपोज टू फाइल फॉर्म 68 विद इन 30 डेज. मेरे में रेक्टिफिकेशन है, दैट रेक्टिफिकेशन स्टिल पेंडिंग, क्योंकि मेरा टैक्स डिटरमाइन नहीं हुआ, फिर मेरे को जो पेमेंट करना है उसमें मेरा जो डेट है, रेक्टिफिकेशन ऑर्डर पास हुआ सपोज आफ्टर 45 days. What shall the assessor do?
No, you tell me one thing. Even after rectification, whether any tax will be payable?
Yes, sir.
Have you paid that tax?
Yes.
If you have paid that tax within time,
No, within the time of 30 days from 154 order, not before.
no, that
Exactly.
is the mistake you have done.
But then, sir, how would the demand be ascertained? Because उसमें मेरे को
No,
demand.
no, you have asked for rectification. According to you, there is a mistake.
Yes, sir.
That means you are aware that will be my tax.
Yes.
You are aware. You should have paid the tax, and there would have been a there would have been 100% case that immunity is granted to you.
In such a case, it is
Because
advisable
the main condition is that tax should be
paid
paid
within 30 days. Yes.
within 30 days. And you have not filed the appeal. To my mind. आपका हो गया क्या नहीं हुआ अभी?
हाँ सर,
हुआ कि नहीं हुआ अभी?
वो सर हाइपोथेटिकल एग्जांपल दे रहे हैं,
ओह,
और ऐसा कोई
अच्छा,
केस नहीं है।
नहीं कैसा तो
हमारे केस में सर क्या हुआ था कि उसका लॉस ही था, तो मेरे को टैक्स इफेक्ट कुछ नहीं था, तो हम फॉर्म 68 फाइल कर दिया।
ओके ओके
इसलिए तो उसमें टैक्स इफेक्ट नहीं था, तो मेरे को फॉर्म 68 का इम्यूनिटी मिल गया।
हाँ तो ठीक है बट इफ सच केस कम्स आई डू लाइक दैट 154 करना है पे द टैक्स तो अदर उसका 500 रुपये ज़्यादा दे दो
अगर बाद में रिफंड किया।
हाँ वी विल गेट रिफंड नो प्रॉब्लम.
Any other questions, etc.? Anybody? Online
on any other
participant?
subject.
Yeah, on any other.
68 में चैंपियन है सर, अगर किसी को 68 का कोई क्वेरी करना है तो सर से बेटर है।
Sir is, yeah, 68, 69. Acha, sir, we had one query from Exide. No, Sumit, if you can ask yourself.
Hello. Yes, sir. Basically, my query was related. Like, I have got a laptop for 1 lakh as a perquisite. So whether like in 194 hour the person has deducted TDS. I have offered the income also. But in what value I need to book that asset, whether it is rupee 1 or the fair value that income we have offered. And in case suppose I haven't booked that asset and it is in our premises in the course of survey or anything like any investigation, how the department will treat it, whether it will be an unexplained income or how we will book this in our.
No, your query is that some laptop is there,
Yeah,
and that laptop has been given to you.
as a perquisite, business perquisite.
You did not purchase, but you did not bear any cost.
Yeah,
You
but,
did not.
but I have offered it as an income.
You have
Because-
already offered it as income.
Yes.
No, once 194 hour TDS is deducted,
Yeah.
Therefore, it has to be. Therefore, it has to be. Now, the fair market value has to be taken. In all these cases, fair market value has to be taken.
Then I need to book as a fair market value.
Yes.
And accordingly, I will get the depreciation.
Yes, you will get the depreciation because it is what is being given to you is a capital asset.
Okay.
Your income is converted into a capital asset. You are paying tax on income, and that is converted into capital asset. You are getting depreciation.
Okay.
Then there is no question of anybody asking you what is the source, where from it has come, and all that.
Like in the same case, if instead of the capital asset, I would have get some consumable item like printing and stationery,
Ah.
stationery papers.
Ah.
It is also I got as a benefit. So whether the same printing and stationery I have to value as the
What is the use of that printing and stationery for you?
normal stationery purpose, like printing book.
So that means this is a perquisite. This is some income is received by you. One side income shown, other side expenditure, printing and stationery.
So that okay.
Income has to be shown. Receipt has to be shown. Then the treatment of the receipt has to be given.
Only that means whatever we will offer in the taxation, accordingly we can.
Yes, you see what used to be there earlier. You people might have come across such cases that jute agents, jute brokers, what they used to get is consignment and consigner and consignor relationship.
Right.
They used to get jute from raw jute from say Mufassils, Coach Bihar, Dinata and all that. And that jute was to be supplied to the jute mills. What these persons used to do is they used to raise bills on behalf of that person sending the goods to the jute mills. Now jute mills used to delay. Then some interest was given. Now TDS was to be deducted. The TD was deducted in the name of jute brokers, though the interest is going to the party who has dispatched. Now tell me what is the how to solve the problem. So I always advise them that you book the entire interest in your books and reduce the TDS, balance amount is expenses given to them because he is taking advantage of the TDS, that is not passing it over to the parties. So what will remain is the difference of TDS will remain with you, say 10% TDS deducted, that amount remains with you, but you are getting credit of the entire TDS because the income has been shown, expenditure is given. So it is the same thing. You show your income, book the expenses, no problem. There he cannot say how can you book the printing and stationery, because it is printing and stationery is never taken in the closing stock. It cannot be taken.
Yes. Oh, thank you, sir.
Sir, which means that depreciation has to be claimed over a period of time
Over,
on
over
this
a period
income.
of time. Over a period of time. Depreciation has to be claimed over a period of time.
Yeah.
डिस्कशन में जैसे आप बोल रहे थे कि 1/4/26 को अगर ऑब्लिगेशन नहीं है, कोई असेसमेंट चालू नहीं हुआ है, लायबिलिटी नहीं है, तो वो कैसे बने? लेकिन एक्ट में जब लिखा है रिपील्ड एक्ट में कि आपका राइट लायबिलिटी जिस एक्ट में है तो उसी एक्ट में रहेगा. सपोज यू हैव पेड एडवांस चेक फॉर द असेसमेंट ईयर 26-27 इन 25-26. आपका राइट 25-26 अकाउंटिंग ईयर असेसमेंट ईयर 26-27 का है. आफ्टर डेट अगर अप्रैल 1 के बाद असेसमेंट चालू होता है, उसका प्रोसीडिंग आता है, यू विल गेट ऑर्डर. तो राइट आपका असेसमेंट ईयर 26-27 का था, तो लाइबिलिटी भी उसी का होगा और वो उसी एक्ट में माना
एक्ट ही
जाएगा.
होगा, लेकिन उसमें प्रॉब्लम क्या है कि ये सेविंग क्लोज जो भैया उसमें सारे में वर्ड यूज कर दिया टैक्स ईयर.
टैक्स ईयर किया है, लेकिन ये अगर हम बोले
नहीं,
राइट,
आप बोल सकते हैं और उसका मीनिंग भी यही है.
मीनिंग भी यही है.
मीनिंग भी यही है, लेकिन मैं आई एम गोइंग बाय द लैंग्वेज. आई टोल्ड यू बिफोर एंड आई एम गोइंग बाय द लैंग्वेज ओनली. लैंग्वेज में तो है ना मिस्टेक.
अंडरस्टूड,
बस मैं यही बोल रहा हूँ आपको.
लेकिन हम जो बोलना चाह रहे हैं आप समझ गए, सिंप्लीफाइड
मैं इंटरप्रिटेशन लैंग्वेज का कर रहा हूँ खाली. अदरवाइज यू आर वेरी करेक्ट. 26-27 will be two. One is tax year, one is assessment year. Assessment year under the old law, tax year under the new law, because both are different years.
आप अगर लैंग्वेज से जा रहे हैं, लेकिन अगर फिर वैसे अगर लैंग्वेज से बात करें, अगर राइट आपका अगर असेसमेंट ईयर में है, आप जो आप राइट उसमें एडवांस चेक का क्रेडिट ले रहे हैं, असेसमेंट ईयर हुआ, असेसमेंट ऑर्डर आया, आपको राइट जो मिल रहा है, समझिए लाइबिलिटी आया 100 रुपीज़, आपका एडवांस चेक 90 रुपीज़ आप लाइबिलिटी मान रहे हैं असेसमेंट.
मैं आपकी बात 100% मान रहा हूँ, लेकिन अगर अपने लैंग्वेज, मैं तो लैंग्वेज का डिफेक्ट बता रहा हूँ खाली आपको कि लैंग्वेज क्या है ये. इसीलिए मैंने आपको 94 से 7 का एग्जांपल दिया था कि लैंग्वेज कितनी डिफेक्टिव है. ओनली टू दैट एक्सटेंट. समथिंग टैक्स ईयर भी है.
No, your question was challan which you have paid earlier, whether it can be utilized.
चालान और एडवांस चेक
हाँ, वही
Whatever,
advance tax, whether it can be utilized in this new act.
इट विल बी यूटिलाइज.
हाँ.
वो जो बोल रहे थे,
It will be utilized under the old act
Old act
only,
only.
under the old act only, under the old return only. Credit will be given there only,
Or you have to take a refund.
or your refund will also be determined under that act itself.
सर इनके जहाँ पे डिपार्टमेंट हमारा रिफंड है, डिटरमाइंड रिफंड है, और उसको सब्सिक्वेंट असेसमेंट से एडजस्ट करते हैं. व्हाट विल हैपन टू दोस जो रिफंड हमारा क्रेडिट हुआ, वो क्या करते हैं कि सब्सिक्वेंट जो डिमांड है करंट ईयर में जो डिमांड है उससे एडजस्ट करते हैं. तो फिर उसमें क्या होगा सर?
ना उसका सेक्शन 245 को लिया है कॉरस्पॉन्डिंग हो, दे कैन एडजस्ट दैट.
मेंशन किया है
और 245 के साथ में उसको लिंक कर दिया है, दैट इज देयर. उसमें नहीं
मतलब
छोड़ा
सर
है.
हम लोग अपना पैसा वाला सारा हिसाब करते हैं.
So right remains how to encash that right, that procedure tax year uses that has dictated.
मतलब झमेला करना हो तो बहुत है किसी के अगेंस्ट में हो तो. बट व्हाट आई वाज टेलिंग यू इज दैट उन्होंने वॉयलेंस लैंग्वेज के साथ बहुत किया है.
सिंप्लीफाइड करने के चक्कर में यही रहेगा, आप उसको यूज कर सकते
उन्होंने क्या है कि वो सरलीकरण के चक्कर में असेसमेंट ईयर में लेटर्स ज़्यादा है ना, तो टैक्स ईयर में कम है.
सरलीकरण के चक्कर में तो आईटीआर रिटर्न सर 90 पेज का हो गया.
हो गया, और अभी कितने का होगा पता नहीं है, अभी कितने का पता नहीं है.
Now they are wanting to consolidate all the 7 ITRs. एक consolidated ITR आएगा.
हाउस प्रॉपर्टी इनकम में जो डाला है कि भाई वो आपका सेल्फ एक्वायर्ड ए रेसिडेंशियल हाउस का डिस्प्यूट चल रहा है कि ए रेसिडेंशियल हाउस शुड बी वेदर फुल रेसिडेंशियल हाउस और इवन हाफ ऑफ द रेसिडेंशियल हाउस कैन बी रेसिडेंशियल हाउस. दोज प्रॉब्लम्स आर नॉट सॉल्व्ड. कंटिन्यू दैट इज एज इट
ओल्ड लिटिगेशन रिमेन्स द सेम, नया लिटिगेशन और बढ़ेगा.
इज. नया लिटिगेशन और बढ़ेगा. ओल्ड लिटिगेशन को कहीं इसमें कोई सोल्यूशन नहीं किया गया है कि ओल्ड लिटिगेशन को जरा ठीक कर लेना, थिंग लाइक दैट. अब आपको क्या है कि वो दोनों वाइफ के साथ बात करना पड़ेगा, 61 वाला वाइफ और 25 वाला वाइफ दोनों को चलाना पड़ेगा.
Right. So any other questions online? Okay, so I think सर अभी जैसे जैसे और पढ़ेंगे ये एक्ट, more and more queries will come, so we'll
bound to
require
come.
more sessions from you going forward. Good thing is that overall everybody over the last 5 days we have this course, section wise we had many differences. We also found out, like you found out in this 270A, this difference, and everybody has got a macro view of the entire act. So when rules come in, then they will be better able to reflect, at least better off than others. And this I think is the first such course in the country, or maybe few of the first courses in the country. And many courses are there which are spread across till February. We thought to complete it in this time, and luckily we have got very good participation online and offline. Thank you very much, sir, for your time also, to take out time from a busy schedule and on Saturday, on a non-code day to involve you in academics. It was a real task for you also. Thank you very much, and a round of applause.
Thank you all.
We have a present task to perform for a small memento, sir. Okay. So, sir, we have one more session for half an hour to recapitulate the entire 5 days. We'll continue on that.
Okay, thank you.
Thank you, sir.
On the same IT,
Huh?
on the same subject.
Same, we'll recapitulate over the last 5 days what has happened. Sir, one photo. Okay, we'll take one group picture with all the participants. ये चेंज Sharbani, can change the PPT. Oh, हाँ, this one. Eta change करेंगे. Saurabh, you come here. I think this will be better. Okay, so recap and restart. एकांती क्या होगा ना? ठीक है. Okay, quickly to recap over the last 5 days, whatever we have done, to the best our team could also remember, and also adding on certain points other than today's points, right? And also, friends, to we have understood over the last 5 days how to read one act versus the other act. So just quickly, we started with various questions. If you remember, on day 1, I had jotted down these 9-10 questions. Now I think by and large we have an answer to all these questions. whether the ITRs to be filed for financial year 25-26 would be significantly different. I think Ministry has given the answer on 8th of December. Honorable Minister of State for Finance, Pankaj Chaudhary, he said that ITRs are being consolidated, right? So they will not be different, but they would be consolidated possibly. What happens to the returns filed till financial year 25-26? Assessment under which act? Now we know under section 536, assessment for financial year 25-26, irrespective of what Surana sir says, you know, with the glitches in the 536 which we just found out, but it will be there in the earlier law as far as quantum as well as penalty also. TDS or income tax payment made after 1st April 2026 under which act? So we now know that it is as per the 25 Act, right? What happens to refund already sanctioned? TDS credit carried forward, MAT, AMT credits carried forward of losses. All of this will be a right which you can carry forward. Only thing is that what would be the procedure? Whether there would be a separate form, a transitional kind of a form where all carry forward will go from one act to the other, or whether it will be through the same ITR which we file for assessment year 26-27, that needs to be seen. Notwithstanding ITR of assessment year 26-27, I think that will be a very, very important ITR, right, for transiting and going by the earlier experiences of transiting into from one act to another. What we can state is that we have to be very careful in the last ITR which we file. It is better not to revise the last ITR which we file, because of, you know, if we revise the carry forward figure etc., there might be glitches if the carry forward is with the last ITR. How would block assessments which cover overlapping period be done? So the provision again 536, interest would be calculated under both the acts separately in case of block assessment, or for refunds also in that matter, or for any demand which, you know, spills over in the other acts. And block assessments again in the overlapping period, the procedure needs to be seen. What happens to the APA applications pending on 31st of March 2026? Again, as per this section 536, we get to understand that any proceeding, APA is also proceeding in my view. So any APA proceeding which is already pending on 31st March 2025 should be ideally done in the erstwhile act itself. Exemption granted choices made in the earlier act, will it be applicable in the new act? Answer is yes. It is a right which you have, which has accrued to you. It will be carried forward subject to any violations in the new act which you do, right? So this choices which you have made, that is the new scheme or the old scheme etc., will be carried forward, but yes, whether you have to file that new form, the form 10 IC, IE etc., whether there will be a new form or the choice which you already made, how that will carry forward in the new act, that needs to be seen procedurally as and when the ITRs and the rules come. What happens to assessment, reassessments etc. commencing after 1/4/2026 but relating to assessment year 26-27 or before? We have this answer. All these assessments, reassessments etc. will happen only under the ITA 61. Now, Serial 9, ITA 61 jurisprudence, is it applicable for ITA 25, right? This is a major question. I think Tulsian sir yesterday, in his view, all these jurisprudence should prevail because we are already using the jurisprudence of 1922 Act also. However, we have to be very careful while using those jurisprudence that it is not distinguished due to the changes in wordings made in the Act, right? Like today Saurav has said on this asset, section 104, unexplained money becomes unexplained asset, right? Now, whether the judgment which we discussed yesterday before Tulsian sir, judgment in the case of DN Singh, which stated that a valuable article is one which has low value, high volume, whether that will prevail when the word money or now also includes asset, right? So that again, those kind of
The use of word notwithstanding being secluded in the new act.
notwithstanding with the new act, even when CBDT has itself said that courts will interpret whether notwithstanding is the same as irrespective. So, I mean that jurisprudence will evolve over a period of time. And last, can reopening be done on the basis of a judgment of a court under ITA 25, even in case similar matter is settled in ITA 61? Now this is reverse. Whether a jurisprudence which will evolve in 25 Act, whether on that basis,
Relief in ITA 61.
number one, relief, and number one, whether department can take relief under the new jurisdiction, whether they can reopen the earlier cases. Again, so interesting times ahead for tax professionals, all of us, right? Okay, so I think overall what, in my view, as of now, when come 1st April 2026, over the next 3 months, the most important thing to prepare for 1st April 2026 is TDS and TCS, because that will impact every taxpayer, all of us, right, from 1st April 2026. Balance would impact us maybe after 6 months, 1 year, we have to take positions, etc. But TDS will impact us on 1st April 26. So we discussed around many points. The major pointers are that TDS rectification statement, this is the to do immediately. Whatever rectifications you have to file till Q3 of 23-24, that has to be filed till 31st of March 2026, right? After that it becomes time barred because the time limit has come down from 6 years to 2 years. All sections, all TDS sections under 393 have 5 tables now. So now there will be no 194C, Q, J, etc. There are 5 tables, so you have to name the tables, you have to remember the tables. Table under section 393(1), that is for payment of taxes to resident, TDS on residents. Table to 393(2), non-residents. 393(3), that is to any other person, etc. Similarly, 394, there is only one table for TCS. So what is required from now is to get your ERP changes. At least we should start a dialogue with our ERP vendors, specifically SAP, which takes hell lot of time to get amended. And mind that this is not what tax department would be doing, TDS entry. This is what payables department would be doing, the TDS entry, right? First also here it is important that your payables department, they would require at least an understanding of this 393, 394. They have to learn 393, 394, right? Clause wise. That would be a challenge, right? I can tell you that because they have many other works to do, and in March, to make, in amidst that closing, to make your payables department learn TDS sections, I can tell you it will be a task. So I think this visibility needs to be given to your payables department from now that this is coming. Okay, yeah, so and May 2026 tax department comes into picture, right? From 1st May itself, whatever your TDS Excel sheets for payments computation should be ready, because 7th of May 2026 you will have a new TDS challan and TCS challan to fill up. July 2026 you will have a new TDS and TCS return to file, and we all know from history that any such change will have lots of technical glitches, lots of decisions to be taken, screenshots to be taken, mailed to CBDT, right? Well, this is not happening, interest should not be applicable to us. Another major change is that officer can cancel the LTDS certificates, right, during the year itself. That power has been given under section 395 to the officers. So again your payables department come into picture, and I think this was not very detailed discussed, but I found out over the last 3-4 days. I had a lecture on TDS elsewhere. Even now in traces, if you see the LTDS, if you give the LTDS certificate number, they will show date of cancellation. So that consumption statement which has come in, I think, 2024 budget, consumption statement for LTDS certificate, that is live on traces now. It also has a tab for date of cancellation. Whether it is that date of cancellation is working or not, that has to be seen. But from 1st April 2026, officers will have got this authority to cancel during the year. So it becomes, whenever you are making use of LTDS certificate, then it is better to see whether it is valid or not. Okay, LTDS now, if you are taking LTDS certificate, then it is applicable on all sections now. Earlier it was not applicable on 194, I think M, N, etc. Few sections on which LTDS was, R was also not there. Now it is applicable for all sections, right? So if you are a person who is taking that LTDS certificate earlier under 197, you have to apply under 395, and you can claim LTDS under all sections until unless, of course, a rule comes, but of course rule cannot conflict with the Act. The Act gives under section 395, it gives you the authority to claim LTDS on all sections. How to carry forward credit of excess tax paid in under ITA 61 to ITA 25? This is a question which many of us have asked, but this process will be notified under the rules. TDS TCS spillovers can be carried forward to ITA 25. What is the meaning of TDS TCS spillovers? That is, tax deducted under this Act, but income booked in the next, subsequent Act, subsequent day, right? So again, this is a spillover. You have to carry forward the TDS TCS credit. How that will be, of course, that the rules will tell, the ITR will tell, and the transitional form, if any, will tell. But that right is available under 536. TDS certificate continues, no relaxation on TDS certificates, right? You have to keep issuing TDS certificates again, while we have represented a lot. Okay, Mr. Chakraborty had asked a question, a very valid question on TDS. As an employer, if you are deducting TDS where the employee has another TDS which is deducted on other income by any other person or other employer, what documents he has to be kept? This that day I think Deloitte was there. In their opinion as well as in mine also, you can take the 26AS form and the TDS certificate. So at least one use of TDS certificate here. Okay, and last we discussed on this word circular, which has been added under 536(2)J, right? So this has been added after the bill. In the bill, the word circular was not there. What is the significance? Whatever circular has been issued under the earlier Act and which is not in conflict, that is, which is a circular under the earlier Act which is consistent with the provisions of this Act, that is 25 Act, that will prevail, right? So again, what would be the machinery through which they will implement this? We discussed with certain members and certain people in CBDT. They said they will come out with a list of all the circulars applicable under the new Act. But again, how it is to be done, it is to be seen. But till such time, in case this does not come out, then you have to see whether you can take shelter under the earlier circulars which are in conflict with the new Act. That is, if the Act has not changed, but the circular gives you a relaxation in the earlier Act, becomes inconsistent with the current Act, again you can take a legal ground that yes, circular will be applicable, etc., etc., but we have to take cognizance of this 536(2)J which says that circular should not be inconsistent with the provision of this Act, 25 Act. There should be no conflict. Okay, profit in lieu of salary. Here, I think Meghna was there from PwC. She has discussed a very important point, including Vikas also reflected on this, that there is a amendment as far as gratuity, commutation of pension, retrenchment, compensation, etc., which are under section 18(2) of the new act, that is for profit in lieu of salaries. In the earlier act, we used to take exemption ab initio, we do not offer it to tax. Now you have to add it to your income and then claim a deduction. So that restructuring needs to be done. Okay, this is one slide which we did not discuss over the last 5 days. This is only my personal opinion. This is a disclaimer. Again, if you see this transportation in all the corporates, transportation is a major cause of discussion, because I think employees, they are the highest taxpayers in the country today, and they keep on searching how to optimize the tax. Every employee uses a car. Now, in the current act, rather than going into the details, in the current act, the position which has developed is if the car is owned by the employer or has been taken on lease by the employer, then you get a tax-free perquisite, right? Subject to a small amount of 2400, etc. But if the car is owned by the employee, then that exemption to a large extent is not available. Now, if you see section 17(2)(e) under the new act, it talks about any expenditure incurred by the employer. If you see highlighted in red, for the current section 17 explanation, for the removal of doubt, it is hereby declared that the use of any vehicle provided by a company or an employer for journey by the SSE from his residence to his office or other place of work, or from such office or place of residence or place to his residence, shall not be regarded as a benefit or amenity granted or provided to him free of cost or at concessional rate for the purpose of this subclause, right? So the vehicle, as per this explanation to section 17, has to be owned by the company or the employer, right? Cannot be owned by the employee, and that is what the corresponding rule says. But this position, in my view, needs to be re-looked at, because 17(2)(e) says any expenditure incurred by the employer for the use of any vehicle for journey by the SSE, that is the employee, from his residence to his office or other place of work, or from such office or place of work to his residence. So this vehicle owned by the company or employer becomes expenditure incurred by the employer, right? So this, in my view, subject to the rules, we have to again relook at this. Can lead to a lot of optimization. Why I know this? It is not that I have dealt with so deeply, but as you get cases, we have done a major restructuring of the tax on salaries for a very, very large corporate, and during that we have taken this position. But again, this has to be finalized once the rules come in. Okay, deductions from house property. This we discussed today also. Two important points which we discussed that the other day. Vikas had also discussed it, that number one is that they have used the word property instead of house property, right? So under section 27 of ITA 61, if an individual transferred any house property for inadequate consideration to his or her spouse, such individual was deemed to be the owner of the property so transferred. However, in the current act, 27 becomes section 25. The words used are any property instead of the earlier expression any house property, right? So whether this has further broadened this position This we discussed with Saurav also today. I think his view was also that this position has been further broadened. Whether it would include furniture also, uh, I mean, this again needs to be further dwelt with. Annual value, that is the deduction of 30% of annual value, there was some confusion while it was a settled position that annual value should be net off with municipal taxes to compute that 30% deduction. Now it has been further clarified in the Act. PGBP. One very major difference, point of difference we understood is under section 26(2)(e), which is corresponding to section 28 in the current Act, which uses the word duty remission or any other export incentive, right? So any other duty remission or any other export incentive. So earlier the position was that the profit itself on the incentives, that would be liable to PGBP tax. Now they have said any export incentive, whatever money you get. So I think there was a question also on this EPCG license. So that is also an incentive. Whether the amount of benefit received under EPCG, right, that exemption which you get for the customs duty on import on capital goods, whether that will be liable to tax, that position needs to be seen in your company. And nowadays, by and large, every company takes this benefit. Now there is a new scheme, MOVER scheme, right, where again those benefits are available. Capital goods, by and large, every company takes that benefit. So again, that position needs to be further, further dwelt into. Correct. So there is interest benefit.
Yeah, but how I will means quantify it? I can take 7%, department can take 15%.
Yeah, correct. But some percentage has to be taken, right? That you are agreeing. As of now, we are not offering anything to tax.
Yeah, but what we can do means what we are doing in our company. So we are discounting it and we are recognizing the asset as well as liability, and every year we are doing the unwinding. That way we are creating the liability in our books, and the asset we have created, that we are depreciated over the year of life. That depreciation we are not claiming in income tax because it is a permanent difference that way. Because I am not paying the tax now. So
Okay.
that's why I'm not, means it is a permanent difference. I'm not getting that depreciation benefit in income tax because the cost I have not, it is a tax duty cess which I'm not paying now.
Yeah.
So that's why we are not claiming that deduction or depreciation on income tax. But interest expense also we are disallowing.
This depreciation which you are not taking, are you, you're not showing it as an income also, right?
No.
It is a forego of depreciation. It is a forego of an
I'm
expense.
adding the accounting depreciation of that dismantling, not, it is not a dismantling, but on the means NPV on which I am creating an asset, that I am disallowing, and I am not taking any income tax depreciation benefit. That way I am actually offering it
That
to
you
tax.
are offering it to tax. I think this is a good position to take, but somewhere in the ITR maybe a disclosure might be required after this amendment, because in the ITR you are not disclosing it anywhere,
No.
right? So maybe that some disclosure is required as an income under section 26.
Yeah.
Otherwise maybe a notice would come and maybe we would be at pains to
But that way anyway I am offering to tax. That
revenue.
benefit.
It is a revenue neutral situation. Now that is revenue neutral we are speaking, we are saying, but the officer might say that maybe this is not the benefit. The benefit is your actual interest cost,
like
which you are saving.
I am doing the NPV, or I took that 9%, means ROR, means that rate of interest.
Correct.
But they might take another
They might take another rate of interest. So that position needs to be re-looked at. That is what, based on your facts of the case. But
Maybe,
Saurav,
maybe
yeah.
a note in the financials might suffice this case. Because if there is a proper disclosure even in the audited financials, even during the course of scrutiny we can explain our case. Thereafter, the view of the AO might differ. But proper disclosure in the accounts is always welcome, because because then you cannot say that there is a non-disclosure.
But
Yeah.
this is now, but as Mr. Jalan was saying that we might need to offer it to tax to as an income. I'm not offering it to tax directly, but indirectly I'm
Since you are not
actually
claiming
paying.
depreciation,
Yes.
in a way you are offering it to tax.
Yeah.
So that is why that position needs to be cleared in the financials itself. Might be when the rules come in, there might be a separate explanation for the same. So we never know what would be the case.
Going by what we understood, that 6 years or 9 years job has been done in 6 months.
Exactly.
This is the verdict of one of the persons who was involved in the drafting, and it was in a committee meeting. So I am not very sure whether rules will have so much of clarity as we are discussing, but yeah.
Yeah, even for the EPCG, like though we are not EPCG license holder, but my customer is having that, and they are actually giving that when I am importing something on behalf of them as a merchant export.
Yeah.
So then shall I also need to add that? Means, or if I have to add, then when? At the on the year of import, or it has to be again that interest financial implication has to be calculated.
Which scheme are you?
EPCG,
EPCG,
my
yeah.
customer has EPCG and they are actually delegating that EPCG license to
To
me.
you, oh yeah.
I'm importing without payment.
Yeah, of course. This is an export incentive. They have not said directly. They have said it has to be an export incentive which you are using. So, possibly.
Or my question was that when I have import and I have not paid any duty at that year, or I just need to calculate the amount and then a means interest implication, how much I am actually foregoing that way. How I will
Benefit you are
quantify?
taking only while importing, right?
Yes.
The
But there is also a question like benefit is what? There are BCD, SES and IGST. If I would have paid IGST, means had it been paid, I would have taken the IGST
Credit, yeah.
So it is not a benefit for me.
Yeah.
Benefit is to the extent of BCD and SES portion. So do I need to offer only BCD or SES or the total customs duty that I am not paying? Same for
See,
mover also.
Yeah, same for mover also till, however, you see, you can always argue revenue neutrality on IGST, but the fact is that it still remains a benefit. You know, at least to the extent of your, you know, what you can argue on is the IGST to the extent it would have been unutilized. Right, so to the extent it would have been utilized. To that extent it is not a benefit.
Yeah.
But to the extent it would have been unutilized for over a period of time, till that amount it would be a benefit for the interest portion. So, to that extent I think yes, IGST also remains a benefit, but I mean, yeah, for you, you can always argue revenue neutrality in such case that I would have just collected and paid. It is not a benefit and all.
Yeah, and same for the other case like the BCD and SES that I am not paying for EPCG. If I have paid, then I would have taken the depreciation benefit on that. That way
Yeah,
I
yeah,
am
yeah, you
offering
can
to
factor
tax,
in.
But now I am not paying, so my depreciation is lesser. So that way I am anyway paying more tax to government.
Yeah, yeah, of course. So whenever, in case this dispute come, again we are only foreseeing, in case it comes, you can factor that benefit which you are foregoing. That can be factored in, right?
But what position shall we take? Means that is a litigation, but shall we go for on an aggressive view that not disallow means not offering anything to tax, or
See, it is difficult to say in this point of time. Maybe the more, you know, because it will be a big impact on you, and a policy decision needs to be taken. It is not a one-time scenario. So maybe much more detailed, in-depth, seeing the facts of the case and the intricacies, etc. Then we need to take a position, rather than just, you know, seeing a provision in the law and taking that. Yeah. So, Saurabh, anything? Okay. So depreciation again. the change of the words for additional depreciation from put to use to first put to use. Now this again we understood that this word first, which is preceding put to use, means that the asset should come and should be first put to use for the purpose for which you are claiming the depreciation. It should not be that the asset is used somewhere else for 6 months and then it is brought in, then again this would certainly lead to litigation in my view. Search and seizures, major changes are there, but again these are very specific, that all electronic, the virtual digital spaces, not asset, virtual digital spaces have also come within the jurisdiction of the officers. While it is a fact that practically they took control of our computer system and we did provide them the access codes whenever there was a search, survey, etc. But now it has come within the law, right? So they can always take your access codes, etc., etc., and all your email servers, social media accounts, remote or cloud servers, everything they have the power to access. Powers of survey, again same thing for survey also. Capital gain not to be charged on investment in certain bonds under ITA 61. Deduction from capital gain is available on transfer of a long-term capital asset for the proportion of the gain invested in bonds subject to satisfaction of condition. There is a view that the deduction is available even if other provisions of ITA 61 deem the gain arising on the sale of long-term capital asset to be a short-term capital gain. Under ITA 25, deduction from capital gain is available if the taxpayer invests long-term capital gains in specified bonds as opposed to the gains from the sale of long-term capital assets as under ITA 61. Thus, if other provisions of ITA 25 deem the gain as short-term, the deduction may not be available. So this is a very specific position. This was not discussed in the classes. Acceptance of payment through prescribed modes. The new act expands mandatory electronic payment rules to include professionals and not just businesses. So those of you who are in service industry, that the professionals, you are in a profession, you also have to have an electronic method of getting your money from the customers. NPOs, major changes, 223, section 2 subsection 23, which is corresponding to 2 subsection 15, that has major changes. It does away with the restrictive proviso of a cap of 20% on the commercial activities. So that cap of 20% is there, but it has gone into section 332 to 355, I think 334 somewhere. But the fact is it is not there in the section, so as Tulsian sir has said, which means that even if you breach that 20% threshold for commercial activity, as of now your registration is being cancelled, or at least it is being litigated to be cancelled, but that time you have to only offer that amount of violation to tax and pay 30%, right? So that issue of your whole registration being cancelled, that will not be into question. Okay, and very major change in NPO which we feel, and Tulsian sir also agreed with it prima facie, that if you are investing in non-specified mode, then the whole value of your investment rather than the income on the investment only, that can be liable to be taxed, right? As of now, if you are investing in shares, only the profit element would be liable to tax. But under the new act, the entire value of investment may be liable to be taxed for non-specified investments. Okay, balance is streamlines but makes NPO records of donors 1 year. This is all. Okay, requires separate books of accounts for those with commercial income, right? So this is again a major, I would say, change for those trusts, Section 8 companies, NPOs, who are offering some part of their income to tax as commercial activities. They have to maintain separate books of account. As of now, you're maintaining mainly one book of account. And last, 30% flat tax in case of certain incomes rather than cancellation of exemption. We have discussed this. Other points, relatives defined as paternal and maternal, removing ambiguity. So this already was settled by the courts, now they have removed. Section 2 subsection 40, which corresponds to 2 subsection 22 of the current act, deemed dividend. In my view, again, the clause F, that is the current new amendment which has been made on the buyback, the amount has to be offered as dividend. That has to be offered on declaration of the deemed dividend, that is buyback, right? From the section 7 read with, the current section 7 read with section 240, that is what comes out. Section 104 we have discussed just now, the expands the valuable articles to assets, also vis-a-vis money, etc. 105 we discussed today, unexplained expenditure. So corresponding to section 69C, the expenditure cannot be claimed as a deduction under any chapter of this act, rather than just heads of income. So at the end, you know, before winding up, income tax still remains bill, it should be act now. Income Tax Act 2025, what should you do for implementation? First of all, impact analysis, maybe sit with your last ITR which you have filed, see the positions you have taken and whether a new position needs to be taken, what needs to be carried forward, etc. I think that impact analysis is important. Discussion with finance team, as we discussed again and again, very, very important for the tax team. Specifically these transitional provisions, more specifically TDS, right? Changes in ITA 25, TDS and other returns filed under ITA 2025, right? You have to review it, and we have discussed all the amendments in TDS. Payments under ITA 25 or 61 after 1st April 26. So we have to be careful with the payments after 1st April 26, so that if we use a wrong challan, if you use 25 challan instead of 61 challan, then again there would be an issue to transit or use that challan itself. Implementation of new rules, form challans, etc. as and when they come. Impact on continuing assessments, appeals, offences and penalties we have discussed just now. Surana sir has discussed. ITA 2025 preparedness. Implementation from 1st April, and most important is changes in the income tax portal. I think this will govern whether we have successfully implemented ITA 25 or not. TDS TCS regime, impact on refund liabilities. Saurav was just saying whether a current liability can be adjusted against a refund, whether a current challan can be adjusted against a liability, all of those. Redrafting computation for assessment year 25, 26, 24, 25, just to know the impact. Preparing for transitional forms, if any, relook at the litigations and actions to be taken before closure. And last, going live, filing the last ITR for 25-26 financial year. As I said, very important, try not to revise this because that may create issues. Filing the last TDS TCS returns by, I think, 15th May, and other returns for financial year 25-26. Last returns are always very important. Making the first advance tax computation payments under ITA 25 on 15th of June, before that. Filing the first TDS, TCS and other returns for tax year 26-27. Is an error, should be 26-27. And filing the first ITR for tax year 26-27. So, thank you very much to all the participants, physical as well as online. Okay, one question is there. Can you read out? So CBDT has said by January. So by January they are saying the draft forms, rules, etc. should come in. Anything else? So thank you very much. And last, keeping in touch. We all have understood that it is a work in progress where we have started first, right? I mean, today all of us who have attended this course, you have the videos also. You can go through all the videos again and again and again to understand. Maybe many of the things which we are saying now, they would be very critical. Some of the things may not be that critical which we are fathoming today, like this penalty and all which Surana sir has said. But important is, friends, to keep on evolving, and whatever questions come, to keep on getting those answers. All these questions which come to your mind today, like, you have such a big question today which has come on EPCG and all these licenses. So what we will do, we'll create a WhatsApp group of all the participants, and whatever questions you have, we'll keep in touch. Maybe we cannot reply immediately to the questions, but certainly we'll reply, and with a disclaimer, because whatever we say, that will all be as of now only a thought process. The final thing will come out, once we are more closer to the date. So thank you very much once again, and we have certificates, for participation, certificates for all the participants. You can distribute. Huh? No, all you can distribute. I mean, oh, but we need to take the photographs also. Okay. And we can send to the respective participants. Thank you. You can take for both. We are all participating. আমাকেও দেবে সবাই। Come. Thank you. Thank you. We will create a group. We'll keep in touch. Thank you.
Keep in touch.
Yeah.